Hello, Luke. I see you there. I'm just sharing the link to my stream. Give me a sec. Then I'll get started. Welcome, everybody. Today we're going to be continuing day 2 of the Japanese Company Handbook Challenge, and we're going to continue where we left off. So last time we were at 1716, and as a brief overview, we identified two potential A stocks. One was 264, and then 6676. Hello, Jason. Welcome into the chat. Yes, the quest continues, and I'm glad to have you follow along. Yeah, so we were able to find two companies. Let me just double check which ones these were. 2674 was, I believe, a request from a viewer. Oh, did I not? Okay. Maybe that one I didn't even need to perform a enterprise value calculation. 2674 is, yes, hard off. Yes, I remember this company. Yeah, Hard Off was one of those companies. And then 6676, that one I think I did. Did I do that one? 6676, yes I did. Buffalo, right, correct, Buffalo, I think I like Buffalo more than the other one. Let's take a look at the ranking real quick. Yeah, I like Buffalo. Buffalo was actually an A. So I might have to disregard a Hard Off in the future. If I find better opportunities. So this might get disqualified, and I have a different set of 10 than his original one. But 6676 was a solid company, Buffalo, and the reasoning behind that one was because it's just very cheap. The company is very cheap, trading at 0.76 times price to book. Had a lot of net debt, a lot of cash on the balance sheet, so it's just trading basically almost like zero enterprise value, offering a 3.6 dividend yield. And the reason why is that they actually lowered the dividend yield in favor of buying back shares, and they're buying back a lot of shares, doing aggressively buying back shares. So yeah, trades at a 10-11 times PE, very low multiple EV to EBIT, basically non-existent because EV is so close to zero. So yeah, so this one looked like a pretty decent, just net play type of situation. Okay, continuing on. Last time we ended off with 1716. This was determined as like a B plus opportunity. And yeah, next one. Okay. Oh, also, the fuel of choice today is this Asahi. Okay, so I had the Asahi version of this with less sugar, and today I'm having the version with just like normal. It's just normal. So it has 370 milliliters, and it has 9 grams of sugar. Not bad. Not bad. So okay, Jason says, fun fact, Buffalo is grammatically correct sentence, but not in Japanese. Is it? Is it though? Are you just trying to get me to say Buffalo many times just to see, just to prank me? See, I didn't fall for that trick. I just said Buffalo 2 times. Okay, so 1716 Mayhill Facility Works. Today, in order to get through the as many of the pages as possible, I think every 4 to 5 stocks that I go through in the Japanese company handbook, I will be willing to take a viewer's request to dive into a stock that you guys might be looking at. So feel free to do that. And in addition, so last time I found myself spending a lot of time in a lot of these stocks with like 157A, 168A, like these type of companies with like a very limited historical type of information. So if I come across another one of these companies, I will just be skipping it. If it's a mining company, energy company that I don't really have a significant circle of competence in, or I don't feel like I could, reasonably attain circle of competence in the short term, I guess, like, then I will probably skip it. So yeah. Oh, Buffalo used to mean bully. Okay. Okay. So you guys can Buffalo me into looking at some ticker, not bad. It's pretty good. Okay, so Mayhill Facility Works mainly engaged in the construction management business that offers builders agency services for office building, construction supervision, and other. Started as an office interior work contractor in 1980, but later switched to the CM business, construction management. Boasts a track record in building, construction, renovation, and other projects, expanding pure CM services in which only fees are recorded as sales. Also engaged in the corporate real estate management business, supporting the optimization of owned properties, mainly for large companies and office business, providing one-stop comprehensive support ranging from building selection to office relocation, focusing on the latter, backed by work style reform. Committed by the Ministry of Internal Affairs and Communications. Okay, so let's think about why this is interesting, right? So like, if you build real estate, right, it can be quite a risky and volatile business. But I think construction management seems to be lower risk in that you don't have to, like you're not putting up capital to buy the land and actually building the property and have to sell it. So you're just doing the management part, is if I'm understanding this correctly. And then also the management part where you're providing property management post sale or something like that, or post build up, is also an interesting business model. So let's take a look. Luke says, interesting in historical German fencing manuals. German fencing manuals. A buffalo refers to a brutish fencer relying on strength. Okay. I think that's in boxing terms a brawler. Fun fact, I used to tutor math, and then one of my students did fencing. Yeah. Okay, Jason says 6961 N plus. Okay, I'll write it down. N plus. That sounds familiar. That does sound familiar. I'll take a look at that. Okay, so first request by Jason, 6961 N plus. If you don't mind typing up a very short a few comment, you can take as many comments as honestly. What is the investment thesis that you see with this company? That would be much appreciated. Okay, but let's first take a look at N plus. And let me update the ticker. So we're looking at 1717 Mayhill Facility Works. Done. Oh, and then our sub goal. So we reached 43. So we kind of like the number of subscribers kind of dropped off a curve. I thought I would be able to get like around 100 a week, because that was like what I was like kind of that was kind of the trajectory. But I guess things don't happen as they seem. So let's try to aim for 100 by end of this week. So by the 20th, see if we can do that. So So we have 43 subs out of our 100 goals. So let's do that. Dope. Yes. If you guys have any friends, coworkers who also invest, please, please send them my way. Okay. Share my channel with them. That'll be nice. Okay. What's 717? Okay, stock price has gone up. Let's see, how's it done historically? Oh, so if you did technical analysis, this company has been on an uptrend. Oh wow, okay, so very consistent uptrend. Some volatility in 2020 time period, which makes sense because of COVID, and now it's just on a solid uptrend. It's interesting to see this type of uptrend. You don't really see this very often. So that's interesting. I wonder what their margins are like for doing this type of thing. Wow. Okay. So previously it was in the teens or high single digits to low teens, and then it just bumped up. Now I'm not sure if they previously did their own real estate projects, right? And so then after transitioning to construction management, that has resulted them to increase their margins, maybe, not sure. Now SG&A went up a lot, which would make sense, right? Because they have construction management is about, manpower, right? Like you need people to do that. Yeah, margins have increased. Nice. Okay, enterprise value, take a look. So no debt. Just cash. Cash balance has stayed pretty stable. I wonder how they're using that, because they are profitable. I wonder how they're using that excess cash. Let's take a look at the last 12 months, multiples. Okay, not bad. Not bad. ROIC also in the mid-teens. Okay, let's take a look at the income statement. Okay, so I think I kind of nailed it, potentially, in that margins had transitioned to like in the 20% region, and then there's a drop off in revenues, right? So because if we think about actual real estate construction sales, right, it's going to be a lot higher and lower margin, right? So maybe between 2019 and 2020, they transitioned from construction to purely construction management, right? Which is why there's this fall off in revenues. But if we look at profitability, operating income, it has actually resurfaced, right? It has resurfaced, so that's good. Interesting. And the thing about construction management is that because they don't have this, overhang of needing to find new plots of land themselves and having to construct, they just become, they just need to find more customers that have more projects, right? So if they have more customers, more projects, they just need to hire more people to manage these projects, and yeah, it becomes more of a relationship business. Yeah. Interesting. Okay, let's take a look at the actual company IR. Okay, let's take a look at what services. Let's take a look at the actual company page, see if we can figure out anything just before we look into the investor relations. Why not utilize construction professionals who are on the customer side? As professionals, we work on the customer side. We support the achievement of construction project goals. Mayho's, FW's construction management helps projects get started early, optimizing quality, reducing costs, shortening schedules. How can you be on the customer side? Like customers as the developer side? Like which customer are we talking about here? 5 benefits of adopting Mayho Facility Works. Okay, as professionals who stand on the customer side, we will support your construction projects. We would like to introduce the benefits of adopting the construction management method by Mayho Facility. Early project launch. We identify the issues our clients face, clarify what plan, by when, how much, and how, structure, and quickly materialize the project. Okay, at the concept stage of a project, when there's little information to make a decision, we organize the various conditions of the project, such as client's project objectives and concept, the difficulty of design, construction, suitability of the plan, construction site, and administrative procedures. We materialize the client's plans using computer graphics, CG, and present a highly accurate schedule and a budget based on competitive pricing by clarifying project issues early on and making goals concrete. Shortening construction time and determining costs early. Okay, so customer here means the actual developer, like the people actually investing in the project, not the people that are going to be living in the, well, if it's office space and the tenants, then let's say. So it's not on the tenant side, it's on the, I would say, the investor side. Shortening construction time and determining costs early. What I want to figure out is if they have any competitive advantage or they're just very experienced in construction management, right? Like, are they using the technology? What makes them special, essentially? Like, what makes them special than other construction management firms or in-house construction management? So we grasp the overall picture of the project, propose optimal ordering method to achieve the goal, helping to shorten the construction period and determine costs early. We build a scenario leading up to completion at the early stages of a project. We propose an ordering method that suits the characteristics of the project and visualize who will do what, when. We clarify the division of roles among stakeholders, anticipate risks early. In addition, at the design and construction contractor selection stage, we request proposals from designers and contractors to utilize their technical capabilities to shorten the construction period. And by examining these proposals, we consider further shortening the construction period. Okay, so they also do the vetting process of finding contractors. I would think that they should have some connections, or that people who are contractors would actually go to them for that. Like, build a connection, be like, hey, you know, if you have to do some type of construction, or like drywall, if you have to do concrete work, you have to do paint work, painting the walls, doing plumbing, they're gonna have some type of relations there. We identify project-specific risks and prevent cost overruns during the project. I mean, this is kind of difficult though. Like, everyone says they don't want to go over budget, but in practice, this is kind of difficult, I believe. There are increasing number of cases where construction costs significantly exceed the budget at the planning stage. We formulate accurate budgets at an early stage and constantly share subsequent costs trends with our clients, preventing rework due to budget overruns, and supporting the realization of products within budget. Okay, I mean, nothing here really tells me that this is, you know, anything super, you know, differentiated, right? I mean, between what they do and, you know, yeah. Wonder if they have an IR version of this. So let's see here. Nope. So English site, it doesn't have it, but we can see what type of industries they help out with. So hotels, plants and laboratories, office fit out, commercial facilities, office buildings, data centers. Okay, so they actually help with construction management for a lot of different industries, which is nice. Okay, I probably have to go back to the Japanese site. Fiscal year 2025 business report. Take a look at that. Let's see, detailed PDF. Okay. Taking a few seconds to load. Don't know why. Okay, securities report. We can do that. We can do briefing material. Briefing material is IP. Hopefully that one's good. Why is this one not showing? It's so weird. Okay, there we go. I'm gonna quickly download this. Probably have to translate it. So, this is 1717 IR. Okay. Hang on with me there. I just need to translate it on the other screen. One moment. One thing I might do in the future is, let's say, pre-screen some of these stocks and then download the IRs and then translate them so that I can go like kind of like rapid fire and just go through them in a kind of ready state. So that's potentially what I can do in the future as well. That's an improvement that I thought of how to make the stream. So there's less downtime, you know what I mean? So okay, so Mayho facility works. Let's see. Okay, so financial results for each quarter. So let's see. They won 2 awards. A DX certified business. Sales have increased. Gross profit increased more than sales. Operating profit. Okay, so some operating leverage. So that's good. Ordinary income. Okay. Operating cash flow. Let's see. An increase in receivables and payables due to an increase in sales at the end of March 2025 was 1.4 billion, and the end of period cash deposits balance decreased 829 million. However, due to the collection of accounts receivable, the end of period cash and deposits balance increased by 2.5 billion. Okay. Number of employees. Okay, this is good. So they're increasing. Oh, this. See, I hate it when they scale it like this. Like, what type of crap is this type of scaling? This scaling doesn't even make sense. You know, it's like okay, you increase by 7 here, increase by 12 here, you increase by 3 here, and you increase by 9. It's like the increase wasn't that massive. But for the operating leverage to the margins to improve, it means like they're able to hire less people to do more work or generate more sales. So office business, let's read this. We provide one-stop, highly specialized support from project launch to the completion of the move, including support for deciding whether or not to restructure offices, such as large-scale relocations and consolidations, improving the work environment, formulating a concept for work style reform, and selecting a building to relocate to. So I guess if you have a company headquarters and you want like a new company headquarters, they are helpful with that. That makes sense because if a company gets larger, they need more space, and they can be helpful. As new office buildings are being built and construction costs continue to soar due to large-scale development, we have been receiving inquiries for projects that place importance on equipment requirements, such as large-scale relocations where new buildings are completed and occupants move in at the same time, which is quite difficult. And the evaluation of our high-level expertise is further increasing. Interest in our company as a pioneering company that is proactively working on work style reform and digital transformation has increased, and we've received more inquiries about work style reform support and work environment improvement projects for group integrations of large companies. I wonder what exactly this means. So is it like, oh, like a work from home type thing where you have a workspace, that isn't just people going to the work, but there's like it's kind of a Google format where there's a cafeteria, there's like a place where you can kind of lounge and work in a leisurely environment. You have a nap room. Like, what did they mean by that? So, in the public sector, our company was selected by the Ministry of Foreign Affairs in a public tender for office reform consulting services. In addition, the number of public sector projects in the office business is increasing, including services that cover everything from formulating the concept for work style reform to supporting its establishment facilities of central government. Okay, so they get not only get business from actual like investors, but they also get business from the public sector, which is nice to know. As mentioned above, due to an increase in large-scale projects, such as large-scale office expansions and relocation projects, sales increased to 1.1 billion. Operating income increased due to increase in anticipatory personal expenses to strengthen the organization in preparation for business expansion. So they're expanding the business, which is good. CM Business supports early launch of projects such as verifying business feasibility, formulating basic plans for new building and renovation, equipment renewal, decarbonization, SDGs related projects, environmental symbiosis, BCP, long life. Okay. We support our clients in achieving their business objectives by optimizing quality at each stage of design, procurement, construction, verifying project schedules, appropriately shortening construction period by utilizing our database and verifying cost validity. So I think this just means like we have some very experienced people who have done all of these things before on our team. So one question you would have to have is like, okay, who is running this business? Who are the core people, that have this capability, and are they staying in the company? I would like it to not be just one individual. Hopefully it's like a bunch of people who have a lot of experience in this regard, right? So if the company's experienced a lot of churn, like in terms of employees, that can be very bad. Our construction management service has been adopted by many public facilities, including local government offices and educational facilities. This is very good because once you build up this track record in the future, when they have more projects, they're going to give it to you. Ministry of Land, Infrastructure, Transport and Tourism, hands-on support service for improving bidding and contracting in local government. In addition, the main public TV commercial projects that we have been commissioned to air through public tenders are listed on our website. Mayho. Okay, let's take a look at what those look like. Just curious. Okay, we just okay. We'll look into that a little bit later then. As the construction industry changes, our social role as a construction management company, which provides detailed support for client decision making, is becoming more important, and we are receiving more inquiries from new clients, including major domestic companies. Sales remain steady. Operating income was 839 million due to improved productivity despite increased costs associated with increased sales. Probably increased hiring, probably. CREM business, supporting public organizations, financial institutions, companies in optimizing their large-scale asset holdings. Optimization, new construction, renovation, and relocation of multiple facilities and core equipment for simultaneous construction and relocation using MPS. Don't know what that means. MPS, by visualizing and creating a database of new construction, project management information, and facility maintenance and preservation information, it is possible to efficiently carry out projects. A centralized information management system for the purposes of promotion, plan maintenance, and learning from the past. Okay. By visualizing, creating a database. I don't really understand what this exactly means. Like, is it some type of CGI thing where you can see what the project will look like? Support for decarbonization, environmental. Okay, we don't care about this a little bit, but energy conservation is probably legit. Yeah. Life cycle cost optimization. Okay, that is legit too. Okay, trends during the fiscal year. I do know that there are some government policies where if you attain a certain level of energy conservation, you get some tax write-offs or some government incentives. So that is a thing. So during the fiscal year under review, we provide services mainly to large organizations, including new clients, for simultaneous renovation projects for multiple locations, public school renovation plans for local governments and facilities, By utilizing MPS, we are able to visualize and centrally manage the progress of each individual project location. And by visualizing construction costs, schedule management, and assets owned, and by utilizing this data, we were able to help our clients improve the efficiency of project management and the maintenance and preservation of multi-location facilities. Okay, so one thing that I got out of reading the sentence is that you can see the progress of each project. Maybe that helps with financial planning, and then oh, if project A, we need to buy land, or project B, we are in the phase of installing some water boiler, etc. Like this month, right? So you get an idea of how much costs are needed to be dished out every month, so that they can do better planning. Maybe that's what it helps with. As a client support business, our unique CM value proposition, including DX to streamline development of multi-locations for our clients, has responded to changing social needs and have been highly evaluated. I think this is a little bit of bullshit, but okay. Digital transformation support project. A cloud system developed in-house based on our 10 years of operational experience, utilizing this data to support digital transformation of customer work styles and facility maintenance and preservation. Mayho AMS, a man-hour system aimed at visualizing, quantifying, and confirming individual activity and improving the productivity and motivation of each and every employee. Okay, so this is more like an employee tracking thing to see what they've done, right? And be like, okay, today you had to do A, B, C, D, where you're located. Maybe there's a GPS tracker, potentially too. So that if they have to go from project to project, you know exactly what they're doing at any single time. And if they don't meet their quota for that day, I've seen that before. MPS is a centralized information management system that aims to promote efficient projects. Okay, we've already read that before. Okay, let's move on. Construction market situation. Although construction demand is strong, rising prices and labor shortages are making it more difficult for clients to proceed with future construction projects on their own. Construction prices are increasing. That's not a surprise. Construction industry. Okay, I need a Japanese version of this one. We gotta open that back up. Let's see. Okay, so this is page 16. Okay, so in 10,000s of people. Okay, so this is construction industry employed people, I think is what it means. So that is 474. So okay, this is 4.7 million people. So there used to be 4.9 people working in construction. Now there's 4.7. So there's been a decline. Okay. Start of construction surface. Okay, if I interpret this correctly, this is construction square footage. So like amount of so Japan is in meters squared. So amount of floor space being constructed. So the amount of floor space being constructed is also lower. So less laborers, less square footage, let's say, square meter footage that's being built, but higher cost. By building up a track record of addressing the following issues, we'll be able to provide high value to our clients in the fiscal year as well, helping clients get projects off the ground quickly and optimizing quality, cost, and schedule. I think this is more experience-based though, visualization of multi-site facilities and simultaneous reorganization. So they're very organized is what they're saying, which is important in project management, of course. Office construction to support work style reform and attract talented personnel. I guess younger generation care about this a little bit more, and they want their work environment to be inducive of productivity or creativity or give you good vibes maybe, but not a big thing, I think. So, okay, status of our order ratio by business field. So office, CREM. Okay, so I think we spent a little bit of time. Let's try to condense what can we accomplish in the next 15 minutes to really finish this one up. So let's think. Employees are increasing gradually because they've been getting more business. Okay, future outlook. As construction costs continue to rise and labor shortages worsen and tariff policy trends and other factors may have an impact on private construction investment, we will carefully assess the impact of a reduced demand for new construction projects and respond appropriately to customers' needs. The thing, though, is that I want to say the construction costs rising does lower demand, but it's not as impactful to their business because they do construction management. They're not actually developers, right? So as long as, like, for example, the government or a local municipality needs to build something, right? Like that's the increase in construction costs would deter them from making some type of investment, but it doesn't worsen their margins. Let's say it just worsens their sales potential. But if a project needs to go down anyways, their margins are intact. Labor shortages worsening. In fact, I could actually envision a variation where, like, people that actually do real estate development, because the sales from year to year are completely unpredictable, you have some companies actually go bankrupt or don't, or just have, don't have enough work for their employees, and so they have to downscale. So when they downscale or when they go bankrupt, then there's going to be more people introduced into the labor market potentially. And because this company does construction management, right, they're able to actually attract talent because their stream of income is, I want to say, less unpredictable. Yeah, so in addition to new building construction, our company has strength in providing construction management services to public organizations and is also engaged in a wide range of businesses, including facility renewal, multi-site reorganization, office construction projects. At the same time, we have received many inquiries for consulting services in which our in-house team of experts takes a neutral stance and considers the feasibility of projects at an upstream stage. So yeah, so they're basically saying, okay, there are year over year, uptrends and downtrends, but then we have these things that are less seasonal, right? Or less cycle based. So that's good. Business direction. Okay, consistently increasing dividends, so that's good. So 43 on, what's our price right now? 1,000. Okay, so 4.3% div yield. That's pretty good. All right, let's recap. So 4.3% div yield, and then you're trading at, I believe the LTM was around 6.9. 6.9. Dude, I'm miraculous at this. Memory on point. Okay, and then PE about 11 times. I'm gonna look at their financial statement to see if they have any investment securities. Please look. Please let me see what the. Okay, I need a financial statement here, buddy. Give me financial statement. Yes, here we go. Oh. Big drop off in cash. Okay, let me just convert this real quick. And I'll be right back. So what's up? Financial statement for fiscal year 2025. Let us convert. Yes, I will wrap this up very quickly. So quickly. Hopefully they use it to buy some investment securities. That's what I'm hoping for. I'm also hoping they have a pretty good balance in investment securities. If that's the case, this could be kind of decent. It's a very simple business, you know, low valuation. That's like easy to analyze. Okay, cash deposits lowered. Accounts receivable, so higher accounts receivable, that's good. Contract assets, more contract assets. In progress. Investment securities, okay, about the same. Not much of a difference. So cash dropped by 900K, but then total current assets increased by around 400K. What tangible assets? Okay, so low tangible fixed assets. Invested a little bit into intangibles in terms of software. So this is probably based on their DX transformation. Bonus reserve. Yeah, no debt. Total net assets has increased. Retained earnings has increased. What is their market cap? 2 times price to book. This is right here too. So they have 900K now on 11 billion. So that is around, let's call it 10 billion. They have 500K, 470K, 470 billion of investment securities. That brings it down to just under 10 billion anyway. So 10 billion. Hello, Yelang. Welcome. I have not seen you before. Welcome. If you haven't subscribed to my YouTube channel, please subscribe and help me with my weekly sub goal. If you subscribe, you'll see an animation. It'll be kind of cool. So 1.1 here operating. Okay, so if they're at 10, this is around 9. Around, yeah, 9 times EV EBIT. I think they have growth potential, but I'm not. Okay, that's the thesis has to be around growth potential now. It's like, how will they continue to grow is the question. There's an outlook, right? Was there an outlook? Quickly look at that. Yeah, but there's some headwinds in the industry. So if you were to do more work on this, you would have to basically look at, are they going to be getting more projects by the public government, right? Are they going to get more? I guess they're winning more awards, right? So if they win more awards, they'll probably be giving more projects, and it's like, this company, their market cap is, 11 billion, 4.3% div yield. I'd say this is like a B company. It's not like overwhelmingly A. It's not like overwhelmingly undervalued. Like, but it seems like it's on the right path. This could be more and more promising in that if they get more projects, they get more. Yeah. Because taking on more construction projects or doing more construction management doesn't really matter on their asset base, right? It only matters on their employee base. So if they can hire more people, then it's not really an issue. Which means that they can actually scale quite well and improve quite well over time. So this is showing them some of their accolades and their prowess in construction management, which is good. Yeah, but I have no sanity check of like, oh, they did a lot of projects, wow. Especially for the public government. Yeah. Prices going up. They think their revenue is going to continue to increase over time. What is their next year of guidance here? 1.2. It's around 8 times EV EBIT. Roughly there. 78, yeah. Yeah, not too undervalued, but decent. Okay, moving on. So let's update our tier list today. So we've identified these two. So everything else we can kind of like delete. So this one, 1717. I'd give it like a, probably it's probably B to B plus, probably somewhere around that range. We didn't leave off 102. We left off at 116, 115. Yeah, we started at 116. Sure, let's say 116. Okay, next company. Miki Kogyo. Yalan, one question I'd like to ask any new viewer is, which country are you from? I'd like to see how diverse my viewer base is. Feel free to answer if you're comfortable. Miki Kogyo. Okay, so a specified contractor of Osaka Gas. Okay, main lines have been gas-related engineering work such as piping works, but recently the housing and construction businesses have grown. One of the subsidiaries dealing with the housing business is a major agency for Sekisui Chemical. What does that even mean? Okay, also engages in the sales of luxury houses for the wealthy and detached homes for younger customers. Conducts the construction business widely in the Kinki region, based on Hyogo Prefecture. The construction business boasts achievements in condos, plants, offices, and others, also strengthening mega solar system engineering works. Acquired the photovoltaic power generation facility. Okay, so like a bunch of stuff. They're doing a bunch of stuff. So let's just this might be too hard pal given they do so many things, and but let's take a look at quick evaluation. So the only angle I can come at this is from purely valuation. Okay, wow. Okay, so they've increased 2,000 out of 4,500 share price. So this is around 40% gain, roughly 40% gain from the low in April. It was rather stagnant for a good period of time, and then ting goes up. Yeah. Let's try to time this for less than 15 minutes. Very low profitability. I kind of just want to avoid it now already. Unless it's very undervalued. Okay, as debt. So that makes things worse. Quite a bit of it too. So 5, 6, 10 billion. What's the PE here? Yes, I am based in Canada. Nice, another fellow Canadian. PE, okay, low, but because they have a lot of debt, so it's like, Income statement. Are they growing revenues? Are they just acquiring businesses? What are they doing here? Let's see here. 30. Okay, so the revenue dropped actually during COVID, and then it suddenly recovered and has dropped back down again. So, I mean, yeah, I would skip this. I would just skip it. Profitability is pretty trash. Pretty low margin business. RIC is really low. Plus they have a lot of debt, so I'm just gonna skip this one. So 1718 is a skip. or just put it in 2 hard pound. You know, we have to figure out an angle on that. Okay, next company, Hazama Ando. Second tier general contractor, Hazama, with a high reputation in dams and other large-scale civil engineering works. Okay, civil engineering. Merged with mid-sized general contractor Ando, having strength in condo and other building construction in 2013, to form the current entity. Since it started in Moji, present Kita Kyushu City, in 1889, Hazama, thus that surviving firm, has a track record in railway-related projects, as well as hydropower plants in Japan and overseas, as received contracts for the large-scale construction, such as Kurobe Dam in Toyama Prefecture, Seto Long Bridge, so a lot of civil engineering public contracts, I guess. Skyscrapers in Malaysia. The civil engineering business boasts high profitability, which is ranked among the leaders in the industry. Formed a business alliance of Toa Corporation, engaging in marine civil engineering, but dissolved in October 2022 due to decreased opportunities of cooperation. Okay, so sales fluctuate, operating income also fluctuates. So I don't think this is a very scalable business or growth business, but let's see if they are cheap. We gotta turn these loonies into Japanese shares while there's still time. Nah, we don't gotta turn them into Japanese shares. We just gotta, you know, take them, convert to Japanese yen, and go on vacation. That's what we should do. Enjoy the fruits of our labor for a little bit. Just kidding. You do what you want. Yeah. Just see here. I'm dying to go on vacation. You know, specifically Japan. I haven't been since 2019. I really want to go. Okay, so also this company has increased from 1100 or 500, so around like 40%ish. Let's take a look at profitability. I feel like these projects, because they build dams, are kind of like pretty unpredictable. So they're either like multi-year projects, or it's like, yeah, low margins here, enterprise value, any angle here. Okay, so it's a $2.4 billion company with 50 billion net cash. What's LTM? Yeah. Yen is in the trash, and also like I did a calculation, but this was actually 2 or 3 years ago, but the actual cost to go to Japan, because of the higher purchasing power from CAD to yen, the cost is roughly the same, if not slightly lower. It might be higher now because Japan is enforcing dual pricing, where tourists pay a price and locals pay a price. Before, that was never a thing, but that's probably going to increase the prices. And I think it's turned into like kind of an externality tax on tourists, because there's just a lot of tourists, and then some tourists really just don't act appropriately. So it's kind of like, okay, we're just gonna tax the tourists then. You know, like I feel like if tourists actually, acted more respectfully in Japan, like that stuff wouldn't have happened. So it's kind of like made things worse for people who conduct themselves properly. So yeah, like now is a time to go, I feel, or else I think more and more places are gonna have dual pricing, which is kind of sad. So yeah, they're gonna. So like for example, if you go to Disneyland, right? If you don't, I think if you're not a citizen or domestic person in Japan, you're gonna have like, yeah, it's probably gonna cost you more to go to Disneyland or Universal Studios, that kind of stuff, right? What would suck is if you I hope not a lot of places, but if it becomes more commonplace, like imagine going to a ramen spot, right? And locals pay 1,000 yen for ramen, but you're an outsider and you have a foreign passport. So like, let's say you have to prove your actual citizenship. So if you show like a non-local passport or ID, then you automatically have to pay like a dual pricing. That would suck, right? Because things in Japan are very cheap in comparison to what we have locally. So for example, in Canada, a bowl of ramen can cost anywhere between like $15 to $20 depending on your toppings. Whereas in Japan, that's only gonna cost you like for a big bowl of ramen, like one like it ranges between like 900 to 1200 yen, right? Like even for a lot of toppings. So, um, and it's locally in Japan too, so you get the best quality. Yeah. Yeah. Jason said, I conduct myself with utmost respectability, shovels ramen into mouth with bare hands. Well, actually, when eating ramen, you're supposed to slurp, right? So not with hands, but with chopsticks. But you're supposed to slurp. Slurp means you're enjoying the ramen, and it's a sign of respect, right? And I enjoy slurping my noodles. That's how I enjoy it. But yeah, I dated someone, and they're like, "No, don't slurp your noodles." Like, well, I'm actually showing respect here. Actually, that's commonplace over here to do that. So. Mhm. Okay, going back to this company. Okay, so EV/EBIT, they actually have more cash, which is good. Oh, not in the LTM though. LTM, they actually have more debt, which is not as nice. Prices also soared since then, so we're at 24. Let's say call it 250 billion. Okay, so this is 28. Okay, so the profitability has also increased over time, so that's good. What is their profitability again? Low, but then some form of operating leverage, which I do not know why. Civil engineering. How do you scale civil engineering projects? That might be because they're doing larger projects. I would say. 10 times income statement. How's their income statement doing? So 410 billion. Oh, slurping is very elite. I agree. I love slurping. Okay, don't do that. Don't do that emoji. Come on. Come on, bro. Come on. Come on. Let's not go there. But I have to agree, it is elite. In every way that you're thinking about it, sure. Okay. Revenues increase as well. It was like 400 something. So increase, but gradually increasing. There analyst coverage for this company? There is. Okay. I'm gonna quickly look at the IR. I don't. I feel like this is a little outside of my circle of competence because these are like, dude, I'm not a. I don't know anything. I don't know much about civil engineering, right? But I do understand like certain projects. But okay, building a tunnel. Warehouse project, tunnels, office building, some roads. Oh, in Nepal. Okay. Wow, they do hit restoration of like cultural sites too. I'm very close to putting this into the too hard pile, but see, what is their solution and technology? Civil engineering, architecture, environment, fundamental technology, real estate, business infrastructure. Overseas expansion. Oh, they have an English site. Do they have an English IR? That would be nice. Ooh. Ooh. Yes, English. Okay. Okay, I can spend more time on it now. Okay, domestic civil engineering, large-scale comprehensive evaluation projects, expressway, water, sewage, facility renewals overseas, production facilities in North America, continued investment in production facilities from Japanese companies. Production facilities, ODA civil engineering projects. I wonder if this has to do with, for example, like you can avoid tariffs if you manufacture certain things within North America, in the U.S., for example, to avoid tariffs. So, for example, I forgot which company it was. It was Kubota, right? They make their own, they make their little mini forklifts in the U.S. to avoid the tariffs. So maybe they help with that. Production facilities. That's the same thing as manufacturing facilities. I wonder if that, yeah. Domestic building construction, production facilities, distribution warehouses, renewal project, materials less labor, energy, material price trends. Okay. Let's try to go through this fast. Civil engineering business. Okay, so orders received, majority of it is domestic, a little bit of it overseas, so not a big thing. Main projects received from Tohoku Electric Power, civil engineering work for the construction work of the new Shin Kamimatsuwa Power Station. Hyogo Prefecture, construction work for the Igumi Tunnel. Yeah, so one thing I need to figure out to get more a circle of competence is like typically how long do these type of projects take, right? And if they're multi-year projects, then does that mean that they have some level of predictable cash flow or revenues for that set period of time before they turn into the next project? And do they sign on projects after, like, let's say this is a 4-year project, right, for the electric power thing from Tohoku, right? So then in year 2, are they able to sign a contract for the next project, right, and then have that come up, you know? So if they kind of are like the industry standard, like they're one of the best at doing what they do, then maybe by year 2 or 3 they're able to sign on a customer so that when this project ends, they can move on to the next one. Building construction business, so also mainly domestic. Tamapoli, Gunma Reiwa Factory Project, Medical Corporation Foundation, relocation and construction of a hospital. They do hospitals too. So they have some backlog. Total engineering and building construction. So, okay. So they have more orders received in this year than last year. Net sales of completed construction contracts. And they have an increasing backlog. Tokai number 2 power plant. Name of construction work. Installation of a seawall, seawater pump room area section, and other construction works at Tokai number 2 power plant. Contractee, the Japan Atomic Power Company. Okay, as announced in May 14, 2024, Hazama Ando expects additional costs of approximately 6.2 billion yen arising from repair and other expenses in relation. Okay, we can spend another 15 minutes. In relation to the incident occurring during foundation work for the steel guard wall for construction works being undertaken by a joint venture with the company as a representative. Current status, Hazama Ando continues to discuss a repair plan for the incident with the contractee and other concerned parties to the construction work. Hopefully they had insurance. Countermeasures for ensuring quality. For large and difficult construction projects, Hazama Ando has long taken all the appropriate measures to put in place a support system from its head office. In response to this incident, Hazama Ando has established a thoroughly committed to quality project under direct control of the president. In addressing this incident, Hazama Ando will assign more experienced efforts from its construction technical departments as support personnel. Wait, hold on. So did they fuck up? In conjunction with this efforts to ensure thorough risk management, Hazama Ando will endeavor to prevent risk by strengthening systematic monitoring and support systems. After determining the repair plan and other measures, Hazama Ando will further disclose information in a timely and appropriate manner. Should it become clear that there are significant impact on the company's financial results. That doesn't sound very good, but why does their price skyrocket? Like, if they had such a big thing happen, like, why is the stock price so high? very curious what exactly happened there. I'm confused. Okay. Cost of approximately 6.2 billion arising from repair and other expenses in relation to the incidents occurring during foundation work for the steel guard wall. They don't say who's responsible though. I want something here to tell me that they have large growth. I'm just looking for something that says that. Okay, so they're able to do very hard projects, like tunnel construction, right? Yeah, some of these things is like I wish I had like a civil engineering knowledge, but like this type of stuff, I don't really know. They constructed the Expo 2025 of certain pavilions. Okay. Probably small scale projects though. They have some growth investments, energy business, real estate business. So they're investing 40 billion yen for these things. So solar power generation, generation facility. Did a special purpose company to bid the launch of Nakatsugawa Power Storage to storage batteries in 2028. They're doing construction of a medium scale complex buildings. They took out equity interest in certain companies. Grid storage battery business. What, so is this for solar panel? Like solar power storage? Yeah, so I wish I had more understanding of like. So I do know in Japan, they kind of had to restart the nuclear energy production because there were a period of time where they just had too little energy, right? So then I guess that's probably why they need this battery storage so that if they have sunlight from solar panels that they can store it and then use it for a rainy day. Okay, I still think this is too. It's not like overwhelmingly A. So I was like, this feels like it's below B. So 1719, I would just put this. It's not bad, but it's not great. Could be something there. I'll give it a C plus. Not bad, but not in my wheelhouse. Mainly that's the reasoning. Tokyo Construction, a mid-sized construction firm affiliated with Tokyo Group's orders from group firms remain at around 20% of the total. Its predecessors in the construction department, Tokyo Corp, established in 1945, once acted as one of the second-tier construction firms during the bubble economy, but faced a management crisis due to huge deficits born after the bubble burst, made a new start as a listed company specialized in construction after spun off real estate business, handling golf courses, hotels, and others in 2003. Has a track record in urban development projects in areas along the Tokyo Railways lines, jointly undertaken with Tokyo Corp, Tokyo Land. Also development projects. Let's take a look at sales, increase a little bit. Wow, really low margins. Okay, this is probably a quick pass as well. So set the timer and start at, let's see, I think I should be able to pass this in 10 minutes hopefully. Just 1720, 1720 exactly. I think these construction companies typically don't have much merit. So let's take a look real quick. Yeah. Okay. No, I think this is a pass. Yes, you have to really, okay, declining revenues too, so more debt. Yeah, already not liking this too much. Okay, maybe below multiples. No, it's high multiples. Yuck. Okay, next. Too hard to figure out value. But like that. Comises Holdings, a major telecommunications construction firm. A pure holding company formed in 2003 through Nippon Comises merger with Sanwa Electric and Higashi Nihon System. Okay. So its business performance tends to be linked to the amount of capital investment by the NTT Group. However, the investments on optical fiber networks development by the NTT Group have already reached its peak, planning to cultivate 5G related demand as IT solutions for server storages and software development, as well as social infrastructure related works, including the elimination of utility poles, are expected to drive the growth. Okay, let's see. These margins are mid single digits. Yeah. So yeah, trading within a range mainly. So went up 15%. Yeah, I don't see much because it mentions something about installing fiber optical lines, right? And that business is, yeah, once that company installs all that needs to be installed, where are they getting additional sales from, right? Right, low margin. Ooh, lots of cash, but market cap's pretty high already. So that's 45, so that's 355 roughly. EV, PE 13 times. Not income statement here. It has increased. $605. Operating income 44. It's like 9 times EV EBIT. Yeah, it's 13 times PE. Yeah, this doesn't spark immense joy in me. So I'll put this in the 2R5, well, 721. Okay, so we've gone through, I believe, 5 companies now, so we can take on a request. So Jason earlier said 6961 N plus. So let's take a look at that company. Oops, 6961 N plus. Okay, what do they do? Okay, business has definitely taken a beating. Well, 14K dropped like 2/3 or more than that. Continuous downtrend. Inplus Corporation manufactures and sells semiconductor automobile parts. Ooh, that's automobile parts is competitive. Optical communication devices and life sciences related products in Japan and internationally. The company operates through semiconductor, digital communication, energy saving solutions, life science segments. It offers energy saving solutions, including gears, impeller, mesh filter, Westco pump, semiconductor solutions comprising IC test sockets and bird-in sockets, optical solutions such as optical devices, which includes lens array for parallel communications, including luminous flux control, optical design. Okay. So I can tell you this is not in my wheelhouse. I'm not that knowledgeable about semiconductors. Hey, margins are not bad. Low teens, but then the margins have been declining. Let's say decline, increase, and decline again. Okay, so some upcycle, downcycle type stuff happening here. So yeah, Hmm. So probably when there was like a supply chain shortage, they were able to charge higher prices for probably their semiconductor related stuff. A lot of cash. So enterprise value 55. Wow. Either operating income fell a lot, or something happened here. What's LTM here? Okay, so let's see, market cap of 36. So this is, let's call this 22, 36, 22. Wow. So that's 14, right? 14 enterprise value. Yeah, 14 enterprise value. That's pretty damn good. Okay. Let's look at the income statement here. I wonder how much investment securities have. 14. Ooh, operating income. So, let's see. So, as recent as 5. Historically, I wonder what they contain. So, 2. So, even at 2 billion enterprise value, that'd be 7 times EV. But if it goes to 4, that's less than 4 times EV, right? And then currently PE is 3.4 and 36. Yeah. Like 11, 12 times. Forward P is 15 times. So net income is expected to drop. But that's historical net income. Let's see. Very, very volatile. But see, I would like to see even further historicals, but I don't have that plan, which kind of sucks. So let's see here. This is 8, let's say 1.7, 1.7, 4.2, 4.2, 8.8, 8.8, 8.8, 11, 12, 12.2. So 12.2 over 6 years, 12.2 over 6 years. So it's like 2 billion in income. So that'd be 17 times P on average. So it's more of a what can they do with the cash type of situation right now. What can they do with the cash? So Jason, what is their investment thesis on this again? This is potentially in the too hard pile. Engineering plastics. So energy saving solutions, semiconductor, network solutions, display solutions. What is that? Lighting devices that expand the possibilities of LED. And plus, high precision lenses are used to control LED light and LCD TV backlights, baselights, downlights. Okay, so that makes sense. So monitors and TVs, yeah. Light flux control technology. Light diffusion lenses in science. Hi, my name is Tony from LC Science. Okay, I think this is probably going to be the too hard pile. First thing is there's 4 different segments, and it's like I can't. Yeah, it's going to be difficult to figure it out. Okay, spend another 10 minutes on this, or less. So Jason says, I know even less about semiconductors. Data center is supposed to be a tailwind, but I haven't looked at what they guide for that. Buyback history, okay. Hmm. So operating income on semiconductors is the policy change and now after policy change. What do they mean by that? Oh, did they change like IFRS, like a different accounting policy maybe? Hmm. Life sciences is losing money, but the small segment. Digital communication is 5% margin, 6% margins, pretty low margin. Energy savings, so also low margin. This semiconductor is the higher margin, but what exactly? So here's the thing that I don't know about semiconductors is like I don't know how leading their technology is. Like, yeah. Free cash flow has actually gone down the drain because they had to invest, right? So they're also competing on technology too, right? So if they have to compete, like where are they in terms of like their technology, right? Like, you know, if they have to spend like let's say 7 billion on tech and then can't compete just to stay competitive, then you're kind of fucked on a free cash flow basis, right? 2023 was when there was a supply chain shortage, by the way. R&D is 1.5, 1.3, 1.2, and I can't determine whether this is adequate amount of R&D. CapEx is pretty stable. Oh, sorry. Depreciation is stable. CapEx has increased, so they're trying to be more competitive. Sales decreased due to delay of demand recovery for general purpose server applications and customers' inventory adjustments for automotive applications. Okay, so they sell semiconductors for probably like cloud applications and data servers, and then they also have semiconductors for vehicles too. Sales of sockets for AI servers was strong in Q4, focusing on test socket R&D. Sales increased due to high orders from existing customers and the launch of new mass-produced products. Digital communication business. Sales of optical fiber lens decreased due to inventory adjustment in response to customer transitions to next-generation products. Seems like a constant R&D and CapEx thing. Sales increased due to expansion of low noise and high efficiency gear solution business for automotive electrification. Wait, do they sell transmissions here? Gear solution? Semiconductor demand. Yeah, it looks capital heavy and hard to differentiate from other makers of tiny plastic stuff. Yeah, this is I'm gonna throw this in the too hard pile. This is sadly like again, going back to one of my key phrases, I want the market to pay me to learn about the business, right? So if the margin of safety or the discount I feel is not undervalued enough, then I'm not going to go ahead with learning it in this scenario. Next company. But thank you for providing that request. If anyone else has a request, feel free to give it to me. But please give me something of qualities. Give me something that will stimulate my senses, okay? Don't just give me any random company that you haven't looked at. I'm not saying, Jason, that's what you did. I'm saying just as a general rule of thumb, you know, like last stream there was a Buffalo. That was very nice. So yeah, make sure it's something that after you look at it, it's like, oh, this is definitely, you know, this can be potentially on a watch list, right? So if it meets that bar, if it can be potentially on a watch list, then you can feel free to ask them about that one. Okay, where was I? Did I just, let's see, Hazama Ando, did that one. Once I was gonna do this, tell yes. Okay, Sinclair. Engage in manufacture of FTTH equipment, systems construction, as well as management and maintenance services for cable TV operators. Also known for proprietary products such as FM notice broadcasting systems that can announce earthquakes early warnings. That's very important in Japan. Based in Nagoya City, Aichi Prefecture, founded in 1962. manufacturing TV equipment. A subsidiary in Guangdong province, China, manufactures optical terminal equipment. Recently, its business performance has been transforming thanks to significantly increased investments in FTTH by cable TV operators to compete with major telecom firms promoting optical communication. Taking advantage of cable TV operators' aggressive investments in a shift to a broadcasting system solely using optical communications due to the emergence of 4K, 8K broadcasting in the Tokyo Olympic Games. Okay. Well, I also don't know much about the broadcasting business, but I think TV broadcasting is gonna be dead. I mean, the latency is gonna be, of course, cable. The defense for cable has always been, oh, it's way more reliable than internet, right? Which is true. But then there will be a time where the dependability of internet is or even a wireless connection, even through data, let's say through 5G, let's say we get to 7G or 8G, whatever that is, there's going to be no difference, right? Or the difference or the probability of a lost connection is going to be so low that people just don't do cable. Okay, price has been low. Okay, so Jason asked, non-company specific question, why do Japanese companies try to do so many unrelated things? Like I just learned Kawai Piano makes medical devices. Very good question, Jason. Okay, so this is just my opinion. I'm not sure if it's rooted in fact or whatever. But okay, so you have a lot of companies in Japan that have mainly a domestic clientele, right? And the question is, oh, they've done very well domestically, or they've kind of like penetrated a lot of their market share, or they've reached their kind of maturity stage of market share generation. So yes, they're generating cash, but then the question is, what do they reinvest it in, right? So they don't have additional. So in corporate America, in the U.S., right, what we're looking for is, let's say the average project for a business generates 10% return, right? The company can retain its multiple or its valuation if it's able to churn the cash and profits that it earns into other things that also generate 10% return, right? But in Japan, you see a couple things happening that lead to shareholder destruction, which is they invest in things that do not generate that 10% return. They reinvest it either just holding cash, which generates basically nothing in Japan because interest rates are so low, or they put it into investment securities. And if you know anything about the Japanese stock market, we know the Japanese stock market has done terribly until of recent, like after I think it was like what the 2000 crash or whatever, or 1990s crash. Basically, they had the lost 30, 40 years, right? So yeah, essentially the stock market didn't really perform very well, right? So reinvesting into the stock market wasn't very good either, right? So what you see is like companies reinvesting into real estate because real estate is seen as stable, predictable, less risky, unlikely to lead to major, like it's harder to fuck up essentially, right? But the thing is the returns on real estate haven't been that great either, right, for a lot of these companies, right? Yeah. And then so what you see happening is either they take that extra cash and buy up other unrelated businesses. It could also be because like, oh, let's be real, right? Like if it's family run owned, right? Like why do you think they want to own a business hotel in a certain prefecture? It's so that if their family goes on vacation in that place, they can, right? I'm just like that could be possible, right? So you see a lot of companies invest in hotels, in condos, in office spaces, yada yada yada, right? And like who's reporting, who's gonna out them for living in the company condo, right? Let's say there's one unit there that's vacant, right? Vacant, quote unquote vacant, right? Who's gonna out them for that? No one. It's like, I know like Nintendo owns like a hotel somewhere. That is like Nintendo themed, like it's a museum slash hotel. Nintendo owns that, right? But let's be real, that's probably to host, execs that go on vacation, or to host, it's for like business relationship building, right? Like, yeah, yeah, um, yeah. It's really hard to internally produce a different industry that's completely unrelated and develop something that's like really good, right? So I don't know much about Kawai Piano. I do know that their pianos are definitely sold even here in North America. Yeah, I'm not sure about their expertise in medical devices. Some of the best ones though is like I see this parking company that also is reinvesting their really high cash flow, really high margin parking earnings into golf courses and has resulted in them being literally the largest owner of golf courses or the second largest owner of golf courses around the world. So that's an example of doing something pretty good with capital allocation. And they were aggressive too. They were aggressive, and they have yeah they use debt. So yeah, yeah. Okay, Sinclair provides integration services for CAT TV network Japan. Its services include system design, engineering, equipment procurement, network management, turnkey project construction for cable plant from head end to custom premises. I'm just gonna look at the profitability. Okay, kind of low margin. Low margin, enterprise value. Nintendo should have bought more US sports teams in retrospect. Yeah, I haven't really looked at Nintendo. Yeah. Nintendo is in a very safe space in that you can't really create a new. They have really strong IP, right? So one thing that I'm very bullish on in Japan, even though they trade at high multiples, is in the AI stage. What we what we go back to is familiarity, right? Like we're not trying to look for something that's auto-generated and very different. We look for consistency and relatability and some level of childhood nostalgia, which is where like Mario Kart, Mario, Legend of Zelda, things that we grew up on, like those will forever hold like value in our in our brains, in our souls, in our whatever, right? And those will always be cash cows, right? Like every couple of years, create a new console, come up with a game with new graphics, new features, better playability, which is arguable, and you just have continuous cash flow, right? And also they also should not just rest on their successes. They also need to create additional IP. So like so this is similar to like Sanrio, right? Like creating new IP, creating beyond just Hello Kitty, making these other things like My Melody, these other little cute characters, right? But the thing that's nice about Nintendo is yeah, yeah. Like the thing about Nintendo is that not only do you have a character, you have a story behind a character, or you have some activity like Hello Kitty. Like I've never played a game with Hello Kitty before, so there's actually less attachment. Of course, Hello Kitty is more targeted towards girls and boys, right? But then I want to say like there's if you can interact with something you have a character, I think it's a stronger IP. Okay, so Sinclair, 3 billion market cap, has more debt now. So 2.6, 1.7, so that's 4.7 enterprise value. 4.7. That's a multiple. 7.3, 4.8. What is operating income? Okay, so for 4.7, 0.65, 1.3, 1.3, 3.9 is 6 times. Yeah, around 7 times. Yeah, gonna skip. Quick look at income statement or yeah, I don't see much growth potential in this. I mean, doesn't scream out as high potential business. 1726, pure holding company of, okay, that already tells me potentially skip, has a mid-sized pre-stressed concrete bridge construction company. So another civil engineering type thing. Although based in the Chugoku and Kyushu regions, its predecessor. Okay, so I noticed in Japanese company handbook, they do a lot of prefacing based off their knowledge of the history of the company. The predecessor expanded nationwide by successively acquiring Kowa Concrete based in the Kando region. Okay. Also engaged in the sale of slabs and sleepers, in addition to solution systems related to construction, as well as real estate leasing. Known for active technology exchanges between engineers among group companies. Eager for M&A to expand the business fields, focusing on leveraging demand for repair and reinforcement. Okay. 1726. Take a look. Any unique perspective? Okay, price has taken a slight hit, 400, down 20%. But it's a very slow, gradual decline. Very slow. Okay. At one point, we're 800. COVID actually made it go up. Huh. Maybe they had some projects on their pipeline. No, it's COVID now. People aren't traveling. Let's build bridges. Yeah, that makes sense. 2020, okay, 8%, yeah. 5%, very low margin business. Really low margin business. Not even that cheap either. Let's see. 15 M cap. 15 N cap with, oh, lots of low, 20 debt, so that's 35. 35 and what operating income? 35 on 18 or 2, let's say 17. Ah, that's not. Skip. Don't bother. 1725? Yeah, 1726. Okay. I guess I've been sitting for a very long time on a stand. Use the standing function. Give me a second. Peek the Naruto merch. Do some old man stretches. Okay, next company. Aso Foamcrete. Sounds like asshole, but okay. A firm affiliated with the Aso Group and based in Kyushu region. And what do they do? An R&D oriented firm which is a pioneer and top-ranked company in civil engineering. Another civil engineering company. Works using aerated concrete, air mixed mortar based on the technology introduced from the Merle Corporation of the US. Ground improvement works for soft ground and contaminated soils is another main line. Lightweight, easy to work air mixed mortar is used in works on filling, lightweight filling, wood filling, and other methods. Ooh, probably looks really trash. Okay, I'm gonna already see this being a pass already. But let's put it in for the sake of doing it. And looks like they don't exist anymore. Perfect. Delisted. Yeah, I'm just gonna say delisted. Even I'm not gonna look into it too deeply because margins already look really crap. So let's Okay, 1736 mainly engages in design, engineering work, and maintenance of automatic air conditioner controlling systems for plants and buildings. Also markets pipes, joints, bulbs, and other piping parts in the use of air conditioning work. So HVAC company. Wait, hold on, not HVAC company, but okay. predecessor of Oishi Hideshige Shokin. Established a sales network with a focus on Eastern Japan and went public in 2000. Dealing in the production and marketing of measurement instruments and the sales of boilers made by Mira. Receives many orders from the IT, automobile, and pharmaceutical industries in addition to hospitals, schools, and local governments. Has a sales and business alliance with Hashimoto Sogyo Holdings, major trading firm of pipes and other piping materials. Okay, let's take a look. Around 6.6% margins. 1736 doesn't look too impressive. Again, all these construction companies kind of want to, like, is this a section? Can I skip the entire section? 22 billion. Okay. Trades pipework equipment in Japan. Provides sanitary, ceramics, housing equipment, heating and cooling instruments, equipment, industrial machinery, pipe, steel pipes. Also involved in fortifications, new and existing buildings, design and installation works, electrical engineering works, and pipeline works. Okay. It's in a competitive industry, likely. Yeah, rather low margin. Okay, so around 7 billion of net cash, so 15 enterprise value. I mean, this is the type of company that probably just stays consistently cheap, honestly. I don't really see much margin expansion. So let's see, 7, 15, 15, this is 6 times, so 6 times EV at current valuation. If it's 2 times, then that's gonna go down to like 7.5. Yeah, around 10, 11 times, 11, 12 times, 13, 14 times. P. Okay, let's look at annual revenues. Doesn't really grow much. Oh, it has grown recently. $30 billion. What is their dividend yield? 4%. Recent price gone up 1100, went up 25%. Okay, quickly take a look. Forbidden access. Okay. Okay. OTEC 1736. Investor relations. I forgot. Let me quickly look at my stock portfolio, guys. I'm gonna take a quick break here. I just noticed I haven't looked at my portfolio yet today. How could I, right? SK Japan has done well today. Okay. Okay, I am done. Now let's continue. Okay. OTEC. I'm just not gonna bother with OTEC. Sorry guys, this part is a little boring because I do want to go through these companies just just so I have a lay of the land, but it is kind of boring. I'll take 1736 of that. investor relations, and difficult to find. Okay, if it's difficult to find, I'm not even gonna try. Okay, so 1736. Let's call it too hard. 1738 Nito, a housing maintenance company based in Aichi. Housing maintenance, house renovation, extension, and reconstruction is a main line of business, and building cleaning is a second. Its operating territories are expanding in the Kansai and Kanto region. Demand for termite and pest extermination, which used to be the main source of earnings, is gradually declining due to decrease in the number of wood houses. So the company is expanding operations to include vermin control, planting, mowing, and others, diversifying into gas, water, heater installation works, in which Tokyo Gas and Toho Gas are large customers. Gas, water, heater installations, as well as reselling and leasing of pre-owned condominiums. Okay, that's doing a very unrelated field, but okay. Its construction works have a track record in wooden detached houses, but the number of housing starts has decreased. Plans to enhance capability to cope with construction works for steel frame. 1738. Doesn't seem like there's much potential here. It's like a company that is just diversifying. 400, 600, trades within a range. Probably nothing exciting about this company is going to happen, but let's see if there's any angle here. Okay, extremely low margin business. I'm going to pass just off of that probably. 2 billion. Yeah, it's probably going to stay cheap forever. Yeah. It's a different story if I see some growth aspect about the company, but if I don't see anything, it's skip. Too low margin. 1738. That's probably not too hard. Just don't bother. Okay, next. Hammock. Provide solutions for network, digital transformation, and sales and AI data entry, primarily in the cloud. Established in 1994, launched Asset View, an integrated IT operations management tool. Its current mainstay in 2000. The cloud version has been available since 2018. Digital transformation solutions and sales include sales support tool, Hot Profile, and new customer cultivation tool, Hot Approach. Acquired a patent on OCR technology using its OCR engine, which utilizes AI to read text and convert them into digital data, and is fostering technology for a service to process forms and stubs as well as other applications. Has a policy to continuously pay dividends once a year. I'm curious how it's actually doing. This one could be interesting, even though it has an A at the end. Okay, share price has gradually increased 60% since its lows. Okay, develops and sells corporate software, network solutions, integrated IT operations management, but yeah. AI data entry solution is probably the most interesting, including cloud type data entry service, virtualization compatible fax server, and mark sheet reading software, Remark Office, as well as develops Japanese versions of foreign software. Okay, interesting. This one could be interesting. Okay, do they have quarterly profitability data? You have LTM data. No, they don't. Okay, what type of fucking data do you have? That's okay. You have no data. No quarterly data. Well, that's fucked. Okay, that's annoying. Okay. Let's quickly take a look at the company. This could be interesting. Network solutions, sales solutions, AI data entry solutions. I think this is the most interesting one. But network solutions, information security measures centered on people, IT operations management software, business card management, new business development. It's like a CRM type thing. IR. Business plan and growth potential. Let's take a look at this. Okay, that's they value no English version. Very curious on their actual profitability.
I ordered 200 hand-forged knives for my dorm room and built a Wix website to sell them.
What the fuck happened here? When did I mute? Holy shit. When did that happen? How long was I muted for? Holy crap. I have no clue when that happened. Okay, well, I didn't lose many viewers, so that's a good thing about that. Huh, interesting. Jason, were you on the entire time? Or did I just click mute when I Okay, good. Less than 2 minutes. I think maybe I pressed it when I was changing off my sweater. Maybe. Hopefully. Hopefully. Yikes. My bad. Okay, let's do financial statement. This is looking exciting. Because from my understanding, like anything that has to do with document scanning or reinterpreting and translating, that could be a good business, if done well. Yeah. Plus, a lot of Japanese firms are kind of outdated in this type of technology, so it's probably, I don't know how special it is though, but we can figure that out. Okay, so let's see here. We need a new one of these. 173A. Hammock. Hammock. Share price. $16.06. Let me just double check if the share price dropped today or not. So 3A 1604. Okay, so pretty much the same price. Shares outstanding. 6.7. And then they have a lot of cash. Okay, cash and deposits. Very nice. That's receivable. Oh, they have some short-term securities. Okay, I like that too. 67.097. Not a lot though, but makes a little bit of a difference. Tangible fixed assets, not a lot for the market cap of the company, so I like that as well. Oh, a lot of intangibles. A lot of intangibles. Might have to do with their R&D. Investment securities, 673.898. Okay, debt. Accounts payable, lease obligations, very little, unpaid corporate taxes, budgeters. Accounts payable, accounts payable. I mean, long-term contract liability. I don't see any debt. I don't see any debt. I see some lease liabilities, but it's really not that much. Not something to really worry about. Long-term contract liability. Long-term contract liability. I'm gonna cross-link this with Buffett code real quick, just to be a little more safe. 173A. Performance, balance sheet, last period, interest-bearing debt, none. Net debt, okay, good. We're in the clear. We are in the clear. Okay, so yes, very low net assets. 136, 2.5 times price of book. The NCI is here? None. Okay, total assets, total intangible assets, quite a bit. That's basically their business. Current liabilities, 225.9.606, 409.955. Dividend, did they pay dividend? 40, okay, so they're paying some dividend. 2.5%, not bad. 994. Well, ordinary profit. I wonder if that's from investment income. That's probably from their. That's probably from their massive cash balance, if I were to guess. What the fuck happened here? 67778. What's this? Okay, cool. 828, 618. Okay, next period we were forecasting 5019, 870, 890, 629. Quickly change that really quick. Okay, quickly look at DNA. Oh, they have no cash though. Fuck. Okay, so I need to. Okay. Okay, 250,095,469,702. The amortization. Nope. Nope. Okay. Expenditure. Okay, mainly intangibles. Yeah. 572,064, 560, 733. Okay, large expenditures in that region. Large expenditures. DNA. Okay, well, if you add that much capex, what can I think about it? They have how much intangible assets now? And then how are they depreciating year over year? So 1 year it increases by 200. Useful life is probably not that long. Close it a little bit. Okay, there we go. Intangible assets. So they depreciated it, and then they bought quite another 500, and it only increased by 120. Okay. So the depreciation was really large. Trying to think. What would be software in progress 187? So probably when they spend money on R&D, they depreciate it really damn fast. Or amortize it maybe even immediately. I don't know. Trying to think. What should I put? So if they spend another 500, okay, let's assume they spend another 565. Right, capex is some negligible amount. It's called 17. Sure. Depreciation is probably going to be another 470. Let's assume. Okay, so depreciation hasn't caught up yet. And, okay, this is probably high then. This is only like 500, some shit like that. And then 10 times PE. 10 times PE. ROE. Not bad. Not bad. I think if there's a lot of growth opportunity, this could be very cheap. That's not the right calculation. Okay, in this sense, intangible assets actually is part of their business structure in that like the software is what's producing this return. So this actual calculation of ROIC is not that accurate, right? Because you're not using their fucking rent, the place of, yeah. I mean, it does show that they use very little capital, but they're investing a boatload into intangibles. So, okay, let's think here. Yeah, let's look at the investment presentation. I think that's very important. Did I get a chance to read that yet? Do I have that downloaded? IP? No, I don't. Okay, we are at the 2 hour mark. I need a quick bathroom break and just a quick break. So let's reconvene in around, I want to say 30 minutes. And this looks promising. This could potentially be an 8-year stock. So when we come back, we'll continue diving into this company. We're spending more time on this, just to uncover because it looks very promising. It's pretty cheap, and if it has growth potential, it's cheap and it has growth potential. That's what I like to see. Small, cheap growth potential. That's the basket that I really like. So yeah, let's see if it can be something like that, and if it can be something like that, we're gonna eat. Okay. I'm gonna take a break. I'll see you guys soon. What time would that be? Pacific time. So 1:50. Okay. Okay, we are back. Oh, what? Okay, we are back. Okay, continuing with 173A, so we determined that multiples are pretty low, and there's growth potential in the stock. So we're just gonna look into the investor presentation to figure out what it is about this company that is potentially beyond the horizon. We need to quickly convert the investor presentation. Okay. Okay, so this is actually their business plan and growth potential. It's not really their most recent IP, but it goes through basically how they plan on growing, which is helpful, which is exactly what I need at this current stage for this company. Okay. Interesting, 220 employees. So they have 3 business solutions in different business areas. One's network solutions for information systems, IT asset management, security products, sales DX solutions for sales department, and AI data entry. I think data entry is probably one thing because I think I remember seeing a company that essentially does all the hard coding or manual labor of manually inputting data so that it can be used for data analytics and AI. So this could be very interesting. Expanding business domains to a new growth stage, sales trend. Hammock was founded in 1994. Steady growth. So they've been releasing something every year to 3 years, essentially. Oh, interesting. So they've added a lot of stuff. So they do stuff with cloud. It's kind of a messy chart. Okay, this is really difficult to read. I'm going to use the Japanese version for this to make any sense. So number 9. Cloud service provider. So Asset View Cloud. And then Asset View Cloud provides cloud services, sure. And then what's this pillar here? Hammock. Okay. What does that even mean? Cloud fee payment. Okay, so Hammock gives a cloud fee payment to a cloud service provider, and then they provide cloud storage. Is that what it means? Okay, that's pretty. Sure, that makes sense. And then what is this? This is customers, right? So customers. So clients, private companies, and government agencies. Okay, sure. And then Hammock provides what to these clients? A license usage fee. For what though? License usage fee for a recurring license usage fee. Okay, sure. But then with the provision of implementation and operation support services. Provision of implementation operation support services. Okay, and then clients Pay for products and services. Well, that's obvious. What are other things they pay for? So they have cloud services that they pay for. Development outsourcing. So they outsource development. Payment of commission fees to these developers. Develop of what, and what do they give? Providing system development services. Okay, what's happening here? Is this also recurring or not recurring? Recurring, and then what is this? Oh. Okay, we have to zoom in a little bit or else it'll be very hard to figure out what this is. Wish there's an easier way, but... License fee. What is this part right here? Sales agent. But why would the sales agent pay a license fee to the fucking customer? Hammock gives a license fee to the agent. Agent gives a license fee to what? To the customer. Okay, I'm a little confused what this is right now. Provision of implementation of operator support services. Okay, what is this? No, I don't want Chinese, I want English. Information input contractor. So they also outsource that? Are they also outsourcing that? Yeah, payment of information input processing. Jesus Christ. Payment for products and services. Okay, so I get it going this way. Yeah. And then what is this service? Data supplier. So it's probably paying a fee if I were the data provision fee, yeah. And then they provide data, yes. And then this data goes to an agent. They give a license fee to an agent. Agent gives a license fee to the client for some reason. Okay, what is this? So this is a data provider. Provision of implementation operation support services. This is a little confusing here. Provision of implementation and operation support service. What? Okay, well then what's happening here? What is happening between the client and the agent? Sure, that makes sense. Payment for product and services. The agent also pays for product and services? Supplier. Supplier of what? This is also some type of payment. Payment for purchases, yeah. Purchase. This is a very confusing chart. What is this side? On premises. Okay, customer, people. That's hammock. So let's see here. People between businesses, government, public agencies. Sale of products, sale of profit, products are an agent. Agent services, maintenance services, provision of services, and then pay a fee, and then fee ends up with Vomic, so then the agent gets some type of cut, I guess. Products and services payment. Yeah, this is not the best chart. I'm just gonna ignore it. Okay, all I can say is like probably there. Like, how does this even connect? Like, I'm not getting this right now. Okay, so asset form and any form OCR are on this side, or on premises. And then these businesses are more cloud-based is what it's saying. Okay. Achieving sustainable growth and stable profits by being in different growth stages. So network solutions, stable growth business. Sales DX solutions, high growth business. And AI data entry is future growth business. With sales DX solutions being the highest CAGR, but it's second in revenues, whereas network solutions is the highest in revenues. Future growth business only 7%. Or is that just what it has historically been? I think is what it's probably saying. Operating profit margins. Okay, so there has been operating leverage. Market size to which our solutions belong. Okay, so network solutions, terminal management and security management tool market, cloud and on-premise. So in total, the market for network solutions is 7% CAGR. Customer contact points, sales digital experience, email delivery platform, marketing automation, customer resource management. 8% overall OCR solutions market, 6% CAGR. Others, BPO services, cloud, on-premise, AI data entry. Positioning map. Large company, small company, back office, front office. So, okay, so we're saying that Hammock is network solutions is for small and medium enterprises, so that's their niche. And AI data entry and sales and digital is for front office. Network solutions for back office. Okay. Source of competitiveness, strengths, realizing high-speed Hammock cycles. What is a Hammock cycle? Understand market needs, have contact with all end users. Through both in-house development and collaboration with other companies, we have the advantage of being able to freely develop products in-house while expanding functionality through collaboration with our companies. Proposal-based sales accurately solve customer issues. Providing all-around products, company size, features and prices that are easy for small and medium-sized enterprises to adopt and also meet the needs of large enterprises. A service that supports the business operations of any company regardless of industry or business type. So even though they're targeting small and medium enterprises, they can do larger companies too. Company composition. Business registration. Wait, is it their clients or is this just Japan in general? Small, medium, and large corporations by sales composition. Interesting. Less susceptible to industry trends and economic condition. Customer portfolio. 3,785 companies. Okay, so this is these are the companies that they cater to, I think is what it means. Let's double check. Number of contracted companies. So they have 3,785 contracted companies, is what they're saying. Sales and number of companies by market size. Okay, so they do cater to small, medium, and large companies. Okay. And they're catering to 3,785 companies, and they the industries are manufacturing, wholesale service, goods rental business, information and communication, government, transportation, financial, and medical, and other. Interesting. Implementation track record. By providing all-round products, we aim to have a wide range of companies adopt our products. Sales DX, sales support products. Oh, they even have Casio. They have some big names in here. Casio, Brother, IT asset management, security products, Panasonic, Kawasaki, AI products. Let's see here. Who uses them? Interesting. Okay, I don't know many here. A potential market that is expected to continue to expand by business size. Rate of companies introducing our products. 11.1%. Japanese business size classification. I don't think that translation is accurate. Let me just double check here. What does this exactly mean? Rate of companies using our products by business size. Context. Get ChatGPT to translate it. By business size, company adoption rate of our products. Company adoption rate. So you're saying 11% of large corporations, which is like literally around, let's say basically over 472 of large corporations use their products. Are we sure about that? They've tapped into that many companies. I don't think that's true, but potential market expected to continue expanding, or more naturally, a potential market with prospects for continued growth. That's what this means. Network solutions. Yeah, I think. I doubt they penetrated 472 large companies. That doesn't seem accurate to me. Maybe they have. Maybe I'm wrong. 472. Actually, no. Yeah, I think it might be accurate. There's 3,785 companies, right? So it wouldn't be unreasonable for them to have 472 companies. Okay, sure, that could make some sense. 2.7% of 61,809. 3%, so that's 600, 1,800 roughly, and that's 0.4%, so that's 0.01%, which is hold on. 1% is 1 in 100. So 0.1% is 1 in 1,000. This is 1 in 10,000. Let's see. 1 in 10,000 here would be 360. 360 times 4. Yeah. 360 times 4, that's 1,200. 1,440. 1,440 plus 1,800 is 3,200. Okay, that makes sense. That actually makes sense. Okay. Okay. Network solutions can be implemented as a single function, can be implemented as a custom-made system as your company grows and implementation costs are low. Asset view. So I think some type of security. Let me just double check. What does that say? Various external threats. Malware containing emails, true. Virus infected sites. Virus contaminated devices. Unauthorized PCs. Okay, so asset view. Endpoint security malware countermeasures. So they basically block the entry is what they're saying. I mean, let's see here. Can we translate it? Asset view, web filtering prohibit access to illegal sites. Okay. And then there's devices and their PCs. Okay, so so prevent access entry, and then what it spits out is okay. We can just ignore that. That's fine. Strength 1. Integrated management for business efficiency. Okay, we need to refocus. So we have to think about, okay, what we can do in the next 15 minutes to get the most bang out of our time. So let's see here. So the company is cheap. We want to figure out what is their competitive advantage. We want to figure out whether their revenues will continue growing, where they're going to be continuing to grow, sell more products essentially, because then their margins are going to continue to increase and they're going to generate more cash flow. So asset view. Okay, so strength 1, integrated management. The growing number of single function systems, server integration. By consolidating the management servers into one, the labor required for maintaining and operating services is reduced. Rule integration, be unified. On the operation screen, accelerate your learning curve, transformation. Data integration, no need to collect data from multiple systems. Data can be used immediately at any time. Master management differs in the system. Personal information search, PC update management, ITS management. Operational efficiencies are because it has an integrated management system. Whatever that means. Strength 2 can be introduced from a single function. It can be implemented as a single function. It can be implemented as a custom-made solution as your company grows and implementation costs are low. Easy to introduce or switch from other companies, can be added according to the issue growth. IT asset management, PC update management, IT asset management, PC update management, operation log management, personal information assurance, encryption. So you can stack what products you want. So there's low implementation costs, and you just add what you need. So it's saying that it's easy to implement and the costs are low. So I still haven't seen a competitive advantage and like why someone has to go with them. But end-to-end sales support tool, supporting corporate sales activities with the concept of strengthening sales and increasing sales. A comprehensive sales support tool that integrates the areas of new customer development, business card management, SFA and SFA sales. Share your activities, business visualize the situation. Centralized management of customer information, business card management, developing new customers, get a list of companies, contact also via form sales, marketing function, visualize customer interest, find hot customers. SFA, Salesforce automation, a sales support system. System that visualizes sales operations and aims to streamline them. Okay. I still have not seen something that's like a competitive mode. Like, why do people go to them? Just because they're low cost? Company database of over 4.8 million companies created by our proprietary AI. Understand corporate attributes and trends. Our unique corporate database, company name, industry, number of employees, sales, listing classification, business content. Accumulated and hot profile customer sales data, business card information, activity history, email. Okay. combine data and sales data for analysis. Pros automatically notify you of high potential customers. Strength 3, low cost selectable functions and departments. So again, you only use what you pay for. It is more cost effective and effective than combining multiple tools. Functions can be expanded in a number of departments. Using the system can be increased in line with customer needs and business growth. Okay, only thing I've seen is that they have a no frills option. Basically means you pay for what you want to use. That's the only thing I see so far. AI data entry solution. Product overview and strengths, reducing data entry work with AI OCR, saving the day in an age of declining labor force. Provides AI OCR as an open premise or cloud service. Furthermore, we also undertake outsourcing of data entry. These measures cover a wide range of customer needs. Cloud services, ideal for processing non-standard forms, any form of OCR. On-premise products, ideal for processing standard forms. WAS, cloud services, OCR processing, and data verification can be outsourced. Electronic Bookkeeping Act. Approximately 7% of companies have experienced an increase in the workload. In a survey we conducted in May 2024, data specification, confirmation, file management, etc. There's a lot of manual work involved, which is an obstacle to improving business efficiency. As we can discover that this is the case, it automates everything from sorting to storage. The values recognized by OCR are necessary for search requirements of the Electronic Bookkeeping Act. Automatic file name assignment. Okay, so that is helpful. Let's see here. Expanding business area of hammock cycle. By rotating the hammock cycle at high speed, we can achieve further growth. Give me a second, I just put in an order for a stock that I wanted to buy. Okay. Okay. So, hammock cycle. Expanding business scope, new products, new features, acquire new customers, increase retention rate, increase unit price. I wish they also gave me data on that stuff because we don't have it right now. Improve profit margins by transitioning all solutions to a recurring business model. Obtaining stable earnings. Okay, so there's a new viewer. So if hi there. So currently we're looking at oh, I should change the ticker. We're currently looking at 1738. Yeah, which is hammock. So essentially, the thing about this company is that it is rather cheap right now. So it has it is really low multiples, right? Like 4 times EV/EBIT, free cash flow 6.5 times, PE's under 11 times, right? Pays dividend 2.5%, and is growing revenues, right? Expected to increase revenues, expected to expand margins. So I'm just trying to figure out like what the growth opportunity is, whether they're going to continue to increase revenues, and if they do, this company can be definitely cheap and be worthy of a A rating. Yeah. Okay, improve profit margins by transitioning all solutions to recurring business models, so some type of SaaS thing, obtaining stable earnings and improving profit margins, increase customer retention, decrease ratio of fixed costs such as development costs to total sales, Control of customer acquisition, sales expenses, advertising, promotional expenses. Expansion of business domains. So let's see. Asset view. So IT asset management, information leakage, mobile device compatibility, endpoint security, PC update management, cloud compatible, SaaS management, office management. Growth strategy 1, expansion of business domains, progress in future. Expanding the functionality of Asset View Cloud Plus to accelerate the growth of cloud services. Expanded functionality including the addition of AI-based security log analysis functionality. Progress, expanding the functionality. Growth strategy number 2, transition to a recurring business. So what do they do now? Provision of cloud services. Server, no operation and management required, immediately can be introduced. Server version up. Establishment of telework. Addition of hardware that manages management bases increase. Preparation time. Expansion of business domain. Expansion of, okay, so the last one was for network solutions. Network solutions, they want to expand the functionality of their cloud and then transition to a SaaS model or recurring business model. Because before they were on-premise, so a lot of things have to do on-site. Not sure exactly what this section means. So sales DX, growth strategy, expansion of business domains. So let's see, what have they done? They have done business card management, MA release, don't know what that means, SFA release, new development release, AI agent, sales productivity, marketing, okay, marketing and automation field. SFA was mentioned earlier. What does it mean again? SFA is one of these. Salesforce automation, a sales support system. A system that visualizes sales operations and aims to streamline it. Okay. New development area, AI sales. Progress, aiming for competitive advantage and business growth by enhancing products with AI. We view AI not simply as technological innovation, but an engine for business growth that involves customer experiences. As we grow going forward, AI will enhance the competitiveness of our business while along 3 axes, differentiation, transformation, and value creation. AI minutes, AI file management, file type, company name, summary of file contents, expanding the corporate database, credit score, group companies, financial information. Growth strategy 1, expansion of business domain. With the expansion of functions to the AI agent area, we provide an environment where anyone can engage in high quality sales activities without relying on the experience or intuition of sales personnel. AI assistant, dialogue assist. The user simply interacts with the AI. AI collects necessary information, organizes, summarizes, and suggests the next step. mean, I've already kind of seen this even through phone calls before, where there's like an automatic teleprompter. Sales knowledge for customers, business card information, email, business negotiation details, web browsing, sales documents, seminar. Understand corporate attributes and trends, company database provided by our company. Expanding sales channels. Expand sales channels to medium-sized and large firms through direct sales and agency sales, and small to medium companies through OEM provision. So they're just going to continue to do medium and above. Okay. The system has been introduced smoothly to financial institutions like Hayaku Bank and Kyo Bank. In 2024, we strengthened our promotion to the financial industry by exhibiting at FIT, Financial International Information Technology Exhibition, the largest IT fair for financial institutions in Japan. Implementation major companies has been adopted by Aisin Corporation, Mitsubishi Heavy. Oh, so some big customers. It also meets the security requirements of major companies and its scalability in terms of functions needed to digitize customer information. So it sounds pretty good, honestly. I just don't know enough about the technology and whether it's really differentiated or not. API integration of Otsuka Shokai's DX integrated package, Smiley, and eValue. I mean, what does this mean? Digital experience integrated package. The DX integrated package is a solution package that integrates the Smile series of ERP, core business system, and the eValue series of groupware information system, and its integrated system that supports companies' digital transformation. Okay, so I'm going to do more exhibitions for their product offerings to financial institutions over time. Still, they use very broad terms, and this is kind of like outside personal confidence, but then the direction, the narrative sounds nice. And that they are able to target some large companies, they are able to expand their business domain, like do more things. Yeah, expand business domain and sales channels. So, AI data entry, fax and scan, fax server, report data, BPO, AI OCR, form design, use of TX OCR, a cloud-based AI OCR service that does not require form design. Growth strategy. Business areas expected to expand in the future. In order to further optimize data entry operations, we will continue to strengthen our functions in addition to flexibly linking with various systems. Smartphone scanning function, instant data conversion via smartphone. I mean, that's the most natural thing because you have an actual lens on your smartphone. Accelerating on-site information sharing. Simply take a photo of the paper you want to do OCR process with your smartphone, and it will be converted into data immediately. It can be easily used even in workplaces where PCs cannot be used, contributing to more efficient information sharing and data management. Link with other systems. By linking with other systems, we collaborate with vendors that provide sales management systems and file storage systems to enhance comprehensive business support for our customers. AI analyst, the future of manufacturing with AI/OCR. Using information such as purchase orders digitized by OCR, AI analysts can predict future demand, making it possible to create efficient manufacturing plans that eliminate waste. Okay. Okay, AI BP so like as a service. In order to further resolve customer issues and solve the social problem of declining working population, we will take on the challenge of BPAAS, which combines the SaaS we have provided with BPO services. What are BPO services? Business process as a service. It refers to a business model that combines elements of traditional BPO. Business process optimization. Is that what BPO stands for? This is a business model in which part of the business process is outsourced to an external company. It is a fund that utilizes cloud services to build optimal business processes for each company, alleviating labor shortages and improving business efficiency. I mean, we will consider investing in M&A and other ventures in order to expand our business area, increase the value we can provide to customers, and achieve non-linear business growth. In April 2025, the company invested in Japan's cybersecurity fund 2. It is Japan's first fund specialized in the cybersecurity industry, funded by investing in security companies. I don't know if that's a good use of capital. I wonder if they did that just for relationship building. Asset view, cloud security operations, inside sales, BPO. What does BPO stand for? Business process outsourcing as a service. BPO outsourcing. Interesting. So some operating leverage. Sales expected to increase 8.8% year over year. Operating income expected to increase by 10%. Sales DX expected to increase the most, and then followed by AI and then network solutions. Which is their core, which makes sense. AI data entry. Sales trend by solution. Increase in cloud services increased by 6.7%. I wish they would tell me what their competitive advantage is. I really still don't know. KPI progress. Okay, that's helpful. Okay, so recurring sales ratio of 81.8%. Monthly recurring revenue at the end of each quarter multiplied by 12. Includes cloud services, on-premise maintenance, and on-premise subscriptions. As a company-wide strategy to transition to recurring business, we have added curling sales ARR and recurring sales as KPIs. Network solutions, recurring sales. 3932. 3932. Oh, so out of total sales, 82% of sales are recurring, which is nice. This is number 51. Okay, so as ARR increased by 6.7% from last year, I think that's probably what it means. Okay, let's do that. Let's do that instead. AI data solutions, 346. So you would insert this data and also look at what the recurring is as a percentage of all revenue for that category. So you can do the recurring sales ratio for each segment, which is helpful. ARR for cloud services. ARR has been on a consistent uptrend, 22% year over year, due to increased cloud services sales. Oh, nice. Cloud service sales ratio as a percentage of total network solutions. Okay, so cloud is, okay, this is a really good trend. Cloud churn rate progression. churn rate remains low as cloud adoption increases. Wow, okay, so this is a really low churn rate, 0.3%. Okay, so AR has been consistently increasing for sales DX, 15 point. So okay, not as high growth as the other, as network solutions, but churn rate, oh, it has been declining. Dedicated staff helps customers increase their sales, resulting in low churn of less than 1%. Monthly churn rate of less than 1%. That's good. They're doing something right. They're definitely doing something really right here. Was DXLER. So I think we need to look into exactly what are the, like what makes this good, right? Monthly fee of tens of thousands of yen to several million yen. Monthly fee of tens of thousands of yen. Tens of thousands of yen. So a couple $100 to several million. So they have an enterprise subscription. Million yen is 10,000 bucks, right? Yeah. History of the company. I think I need more time to figure out what this company is like, how they're going to strategize and how they're going to grow. I think it's still unclear, but it definitely has potential to be an A company. So I'm going to put this in the A tier here. 173A. 8. 676. 674. A minus. Okay. Nice. Next company. Koatsu Kogyo. Oh my god, I see Briz Construction. I see another construction company I'm probably gonna pass, but this is probably a quick one. 1743. Let's quickly look. Had a spike one period of time, 2022, and then it's gone range bound for many years. And looks like it's gonna break out maybe. So the company designs, constructs, contracts, and supervises civil engineering construction work using pre-stress and general concrete. Sounds like a very competitive business. How come there's no data? Okay, there's data. Okay, good. Yeah, really poor return on equity. Fluctuates in terms of profitability too. Currently on the low end of its margins, so there's some type of cyclicality in the business. Income statement, let's see. So increased, dropped a little, and then increased again. Let's go to multiples. Kind of cheap. Kind of cheap. Our cash and debt 2.4. Okay. What's LTM? Plus the stock price wanted to break out, so it's worth more now. 3.5 on 840, 834. Maybe no debt. So 2.7. 2.7 around like 500k of even. So over here is 4.5, right? So let's call it 5 times. So that's like 600, yeah, so. What's their dividend? 2.2%. But it's hard to see their revenues increasing that substantially, right? Like I don't cash. What's their cash? Like it's cheap, but it's not like that cheap, right? Like I also don't see much growth potential. Yeah, it's the low profitability business too. Okay, I'll put this into B category, 1743. Oops. Okay, there's that. Next, Sulkin Ace, sorry, my eyes. Mainly engages in construction business. No, another construction business. Leverages engineering capabilities of partners to earn profits by winning orders of large-scale repair, new construction, and other works. Originally established selling houses for lease in 1965. Oh, not the greatest business, I don't think. Very cyclical. Look at that cyclicality there. 1757. Holy crap! Went from 200. What from 20 to 200? So 10 baggered, and then it basically crashed. Okay, so we don't even know what the PE is. If the profitability is undeterminable, then we just ignore, because then it just becomes way too difficult. Holy shit. Oh, okay, yeah, we just ignore this like the plague. This is too difficult to ascertain the value of here. Yeah, that's the market cap of this, 4.7 billion. More debt, 6 billion. Yeah, those are some crap numbers. No, we just skip. Too difficult to figure out. 1757. 1757. Yeah. Hello, Luke. Welcome back. Glad to have you. Okay, next is Taiyo Kiso Kogyo. 1758. Construction and civil engineering. Oh my god. Okay, quickly look at this. Also, don't feel like this is going to be like super undervalued or anything, but 1883. So kind of range bound. So 2500, 1400, 1500. So 20% right now. So if it retraces 1,000, that's like 60% upside from these levels. What's the profitability? Probably also very highly competitive, so single digits is my guess. Yep. Yeah, okay, we skip. Look at annual. Yep, we skip. Too little profit. Yeah. Low profitability. I might add, let's just add this. Losing money. 1747. I think that's the last one, right? Okay, we'll do that. Will Smart, not Will Smith, Will Smart. 175A deals in solution proposals and systems development, fully leveraging digital transformation technology, mainly for the mobility industry. The comprehensive information distribution service, the core business, integrates information on timetables and seat availability with different specs for multiple firms and displays it on signages for users at bus terminals, airports, and other locations. Oh, timetables and seat availability. Okay. For buses, airports, and okay. Also engages in support for cloud computing, developing reservation systems for car sharing and other services, while helping local governments in formulating policies on transportation reorganization. I might not be doing very well. We'll see. Let me take a look. Okay, so limited history here. It's also going to be one of those easy pass ones if we have no data. No data. Awesome. Easy pass. Not enough data. Okay. Next. Takamatsu Construction Group. Another pure holding, another holding company. Okay, group acting as a second-tier general contractor. Unlike other construction firms, company is proactive in M&A of competitors. Core subsidiaries. Okay, if you're do M&A of competitors, then you should be growing, right? So let's see if they're growing. Alistair, welcome back. I haven't seen you in a while. Yes, I want to find an S tier. We have not seen one yet. You know, it's like we're looking for a legendary Pokemon. I have the Master Ball ready, but we haven't seen any. Okay, this company has gone up a bit. 2,000, so it's up more than 50%. 2,500, so that's up 25% ish. It's not possible. How's there no data? Okay, good. Okay, so just took a second to load. Okay, low profitability yet again. Okay, so 109. Now let's face more debt, so it makes it even less compelling. 16-ish. So 125. Okay, skip. There's really no much angle in these ones. So 1762, next. Kudo. Judo. Predecessor is Kudo Josui. This size general contractor operating mainly in Kanagawa. So don't see much potential in this one. 1764. Let's see. Okay, very range bound. Extraordinarily range bound. 200s, around 25% increase up and down. No, there's gotta be some information. This one is not a internal server error. Come on. One second here. Okay. Well, I don't think this one's gonna be promising anyway. So. Okay, we'll just skip it. I don't. Token Corporation. Okay, major builder of houses for leases. The main line is a construction business which proposes the operations of lease houses to landowners and builds them. Boasts a presence in management brokerage as well, expanded nationwide with its base in Nagoya. The number of orders is the most in the Tokyo metropolitan area, which accounts for nearly 70% of the total. Core products are the Shilulu. It's not La Boo Boo, it's Shilulu series. Okay. Yeah, people. What if you had an apartment in a box, right? Like, what if you can pull out a box and be like, okay, this is. You know, there's a 1 in, say, 100 chance you get the penthouse suite, you know? Oh my god. Gotcha, but with real estate. That's intense. Okay. Core products are the Shilulu series, high seismic performance, heavy and light gauge steel structures, eliminating the need for structural calculations. Made NAS Stainless, a housing equipment maker, a subsidiary in 2005. Manufactures structural materials at plants to produce processes its sites. Also engaged in the development and management of high-end lease condos. Okay. Wonder if it has the business model of like Shinnikin. Token Corp. Oh, okay. So oh, this is on the TSE. Should be fine. Should be fine. I can double check. Let me double check this shit. 1766. Yep, it's on the TSE. We're good. We're okay. Um, rental apartments, condos, so they have some lease income. Okay, okay. So let's hope there's some hidden value here because they could be a shindig. No way. Okay, good. Okay, let's see. Expanding margins, good. Expanding margins. What should happen if you're doing well in your lease? Property management arm. 187 market cap with 120. What the fuck? 124 cash. Raking in cash like a mofo here. Okay, 124, around 60 enterprise value? 60, so it's doubled. So this is like 4 times now, right? At this point. Okay, so 60 on operating income of 21.28. So that's 3 times. So even at 60 out of there, 15 billion, that'd be 4 times EV. Okay, that is cheap. So this could be a Shinnigan play here. But they have a much larger market cap though, 1.87 billion. Net income 9. But market cap is 187. That's over like 20p. I don't like that. Over 20p. What's LTM? It's also worth looking if they have any investment securities. I think that could. Okay, so let me, before I go further into this, essentially what you need to figure out for these type of real estate plays is this is very reminiscent of Shinnigan. That was a take private company. It was formerly public, but got taken private. So the analysis for Shinnigan was they were basically selling properties to salarymen and then leasing and then handling the management of those properties after the real estate was built, right? So essentially, it's these salarymen get the asset depreciation if it goes up, and they also get some income from collecting rent, right? And because these salarymen don't want to deal with any of the rental management, I mean they can, but likely they don't. Shinnigan was making really highly reoccurring lease income from managing these properties, and it was just continuously going up. And then COVID happened, and then vacancy rates just plummeted. So essentially, like no one was leaving their properties, right? So it's like a 99% occupancy rate, some really high number, right? So that's what I'm looking for. I'm looking for a consistent increase in leasable properties under management, and then also low vacancy rates or high occupancy rates. Yes, if I see that and I see a flywheel of that, that'd be dope. Lease construction, yeah. Design, construction, rental agency, renovation business, online advertising. Okay, I like this. Let's just hope that this is similar to Shinnigan. Oh, one thing I also have to look at is if this company was engaged in any fraud, because during that period of time, there were companies that did this type of thing, and then they would approve people even though they were underqualified. Like their credit wasn't really that, well, Japan's version of credit, I guess. Basically, these people were underqualified for even these loans, right? And then there's another company that also built really low quality buildings to the point where like there were such big problems with them that they had to basically the stock took a huge nosedive because they actually had to like repair every single property that they fucked up. So that was a big deal. So that's why you can't take shortcuts. where is their company information here? Give me. Okay, financial statements. Financial summary. Why does this say 2020? Oh, okay, I'm going to pretend that's not a thing. Okay, this is recent. Good. Margins have increased substantially. I don't know why. We're going to have to figure that out. That might have to do with some construction. This is securities report. Do they have a financial results briefing? Doesn't seem like they do. Group report. So they had an English report. They don't do that anymore. They're like, fuck English investors. Management analysis. Do we have any IPs here? 10-year performance, trend graph, sales per profit, 10-year trends in number of establishments. This one we can spend more time in. This one I can figure out. So they don't do investor presentations anymore. That's okay. So the company's not reporting as much information as I would like. No, that's back to that. No, that's also back to that. Okay, I think that's all they're gonna provide. They're gonna provide these two things. So okay, we'll use what we're given. No choice. Okay, we'll download this. Let me give me a second to download this on the side, guys. Financial statement. So this is 1766 token. Wait, which one is this? This one was, okay, this is securities report, I believe. Let's do the security report real quick, and then we'll do the financial statement. Okay, and then the next document. Let's go, let's go, let's go. Okay, we got it. Okay, I guess we could quickly calculate the enterprise value of this business, and then do that. Okay, so mover copy. Whoa, a subscriber. Hakim, welcome Hakim. Thank you for subscribing. See, guys, this is why you need to subscribe, right? Because this stuff happens. Thank you for that. That woke me up. That gave me some dopamine rush. Thank you. Very nice. Welcome, Hakim. I always enjoy engaging with new viewers. So Hakim, which country are you based out of? And do you have any Japanese stocks that you're currently looking at? Okay, so token corporation 1766 for fiscal year 2025. Share price. Share price is, let's see, what does Yahoo Finance say? 14,000. Jesus Christ, this is an expensive stock. This is an expensive stock. Two, 28297, 188 million, so 1.8 billion. Companies like 1.2, 1.3 billion dollars USD. What's the dividend yield? 360, 2.6%. Ensuring I read this correctly. 136 billion, right? So wait, this is actually accurate. So, okay, notes receivable, uncompleted construction expenditure. Okay, nothing else there. Let's see what type of tangible assets are these. 41 billion in tangible assets, 2.8 of intangibles. Investments, long-term loans, long-term deposits. Okay, these would qualify as long-term investments for sure. 2.2835 plus 20k. Yeah, that would count. That would count. And then what else? Unless long-term deposit is guaranteed deposit, but I think that would be something else. I think that would be something long-term deposit. If it's rental guaranteed deposit, it's a different thing. But I think this is in relation to investments. I'm pretty sure. Okay. Okay, let's see here. Liabilities. Don't see any debt. Don't see any debt. I think we're okay here. Net assets. Book value. 1.4 times book. NCI, no NCI. Okay. Intangible assets. 2808. Total assets. 8663. Current liabilities. 66559. 94901. Okay. Okay, let's take a look at the profitability transition here. 3037. Oh, no margins. But it looks like it has expanded. Somehow, we gotta figure that out. Why? How was it able to expand? And then, what's the next year forecast? Oh, even higher revenue, but then lower margins. And then this is 14264. Okay, 13 times PE, but really low margins because a huge cash balance. Okay. DNA, let's look at flow. There we go. Ooh, not a lot of depreciation. Not a lot. Oh, decent relative to income. Any amortization? No, we do not see any capex. Okay. 871, 1607, intangibles, 678, 215, taxes, 30%. Oops. Okay, so that's. Do we have any analyst estimates on this company? Do we? Oh, we do. Nice. Okay. 23,000. But what did the company say? The company says 21. So analyst thinks higher. There's one analyst, by the way. Capping's of 1,000. And DNA of 2.3. How does that happen? How does that happen? So this is 871. Oh wait, hold on. 2.8 and this is 1.4-ish. Okay, I don't know how they got these numbers. Yeah, 2,300 here, 1,000. 1.7, 1.607. So that's excluding some intangibles for sure. For sure. And then I don't know what the fuck this is. How does that make sense? Okay. Okay, let's look at Koyfin real quick, just to get a sense of cash flow. Investing up. Interesting. Okay. 871. Okay, 871's right. Okay. Oh, I see. So they had a period of major freaking capex over here, and then now we're in a phase. We're in maintenance phase. But the question is, when are we getting out of maintenance phase? Sorry. Huh. I mean, this business model doesn't really require a lot of capex, though. Why the fuck? Unless they transition their construction company into more on the other side. That's certainly possible. I don't have a gauge of this. Let's just say it's 1,200 for whatever reason. Cheap on because they have a lot of cash. But the question is, what do they use the cash if? We're just gonna hoard cash? Because if it's this lease business, it's just gonna hoard cash, right? What are they gonna do with that cash? Okay, let's see here. So they definitely constructed some stuff. Let's take a look at some of the sales breakdowns so we can have a sense of. Okay, so there's no other sales. Oh, that's forecast. Okay, sorry. 366,640. Okay, let's see here. Completed construction. Concurrent business sales. Okay, concurrent business is probably their leasing business. It probably does extraordinarily well. Okay. Cost of sales is 303. That's massive. Real estate rental business. See, I want to see the segment margins of the real estate rental business because I think that's the most interesting. Right, so that's 213,284. 213,284. What? Okay. Let's see if there's any breakdown over here, because they should be. Okay. Okay, segment profit, the real estate rental business is, so this is 207.14, is around 7%. And over here, also around 7%. Higher revenues, slightly lower margins. Not that great. Segment profit over here, this is like 30% on construction business. And this is 1%. Sorry, 10%. 10%. Well, that's pretty good. Okay, so this year they had 10% from construction business, which I don't know, maybe they controlled costs more, like cost of raw materials more. Yeah, Yeah, but this is a highly predictable business, right? So if we can grow this over time, that's pretty good. Um, do they have any guidance? Okay, 23 pages. We can just flow through this pretty simply. I would like to know how many managed properties they have. Because if I can see an uptrend in managed properties and I see like, because it's scalable, right? Managing rental properties is an extraordinarily easy business to scale, especially with like AI stuff nowadays, right? Okay, let's take a look. Management fee income, brokerage income, renovation income, repair work, 1 year sales, outsourcing fee, others. Sorry, the revenue. Total number of contracted managed properties. Okay, so number of properties has increased. General property, I don't know what that means. But properties have increased. Occupancy rate has also increased, which is great. Oh, and you have monthly occupancy rates. Definitely spend more time on this. Okay, so let's see. It drops the most in December. There's always a drop in December. Why is that? Why do people move out in December? Isn't it cold? I guess on the contrary, during the summer months it's hot, so people don't want to move. So maybe, okay, so that probably makes a little sense. Maybe when it's not as hot, people are more prone to moving. Really not sure. Interesting. So we can see a natural progression in the number of units, which is great to see. And now we're 253,668. Sublease properties. Okay. Sublease properties. 280. Yeah, but then how come this one is 271? Oh, this is actual leased out property. So out of, wait, hold on, that doesn't make sense. It was 1% occupancy, or 99% occupancy. 1% is not that large. So how come 294, 244? Sublease properties. Rental management income, 18,505. Rent paid for vacant rooms, 3,714. Okay, so they do some type of insurance. Rent payments for vacant rooms. Sublease profitability, 80%. Rent paid for vacant rooms. Oh, are they saying that they have their own properties that they manage? Rent paid for vacant rooms. But they have 1% vacancy rate. So how does that make sense? Yeah, how does that make sense? Rental management fees are the management fees charged for rental property services from rent received from tenants of sublease properties. This is equivalent to a combination of management fee income and rent payments for vacant rooms. Okay, so this is what I would look at. I would look at, are they, like, how many more of these properties are they building? And then what conversion rate does that result in them attaining more sublease properties, right, to manage, right? It's like, this is a really good flywheel, right? Like this is an insanely good flywheel. Like the cash is just gonna keep piling. The question is, what the fuck are they gonna do with that cash? Right, like it is cheap. It is super damn cheap. It's like, what are they gonna use like cash for? That's what I'm mainly concerned about. Because that cash is just gonna keep piling, right, from the lease business. Because the lease business is so predictable, super predictable. What will they use that for? Build our properties. Orders. Rental apartment, apartment, private residence, commercial apartment, rental store. Good morning, Kalma. Oh, I haven't seen you in a while. Actually, no, I should have seen you last stream. My mistake. Yeah. Good to have you back. Welcome, welcome. Monthly total orders and cancellations. So, more and more orders. More and more orders leads to more and more leasable properties. Yes, this is still 1766. Yes, correct. Are you fed up, Luke? Just thinking here. They need to either, but it's still trading above 1 times book. They need to issue more dividends. I think that's what they need to do. 13 times P. Trying to think of how. What are they gonna do to extract value? There's too much cash on the balance sheet. I mean, unless they start buying some real estate. This one has potential. Just really curious how they're gonna do that. What's commentary by management? Let's see what they say. Okay, so in the construction industry, while housing prices remain high due to soaring construction material prices, consumer confidence worsened due to a decline in real wages accompanying price increases. And as a result, the number of new housing starts fell below the previous year to 179,000 units. In addition, the number of new rental housing starts was 374,000. Okay. Under these circumstances, the group's consolidated performance shows. Okay. Construction business, the amount of completed construction work in this consolidated fiscal year increased compared to the same period of the previous fiscal year due to an increase in the amount of orders processed in the previous consolidated fiscal year. In terms of profits, although the prices of construction materials and labor costs continue to rise, gross margin of completed construction work improved due to completion projects after the sales provision made in the past year. In addition, the ratio of completed construction projects with high earthquake-resistant steel frames increased, which improved the productivity of NASDAQ. And the consolidated gross profit margin of completed construction work improved. External sales, rental business. In the real estate rental business, sales increased from the previous year due to an increase in rental income and management fee income from tenants to the sublease management agency for a bulk leasing system. Accompanying an increase in the number of managed properties, we have enhanced our tenant recruitment activities, such as renovating our brokerage support system, conducting a room search campaign. In addition to these measures, we have also worked to promote property purchases and management contracts to expand our management business. Property purchases and management contracts. While actively developing homemade FC stores and homemade clubs online members, and building a nationwide real estate company information network, thereby strengthening our brokerage competitiveness. As a result, the occupancy rate of our buildings was 99%, maintaining a high occupancy rate. As a result, sales in the real estate rental business were increased. Okay. Other business, general advertising agency business, travel agency business, and operation of golf courses and hotel facilities. So I wish that you would use their cash and actually buy more stuff. But then the thing is, there's a parking company that does golf courses, and they bought most of them in Japan already, and they're not going to be able to outcompete them. So maybe hotels or some type of amusements. Tough. Future outlook. Okay, regarding the group company's forecast, sales in the construction business are expected to increase due to an increase in orders received in the fiscal year. In order to realize early start and completion of ordered properties, we will strive to increase the amount of completed construction work by thoroughly managing the progress of each project and promoting the prompt securing of subcontractors in response to shortages in each type of work. In terms of profits, as construction material prices are expected to remain high, we will continue to strive to reduce costs by consolidating purchasing organizations as a head office and thoroughly managing costs. They expect profit margins on completed construction work to be 30.1% due to increased construction materials. On the other hand, while financial institutions' lending attitude towards construction funds for rental buildings remains strict in some areas, the lending environment remains relaxed in urban areas where rent prices and land collateral strength are high, and landowners' need for utilizing idle land remains strong. Let me drink some water. Our group will continue to expand our market share by implementing efficient order activities in areas where demand for tenants is expected. In addition, we will expand. See, the thing here is they don't say what their rental strategy is, right? For Shinikin, they were looking for properties to build within 10-minute walk from the train stations. They don't say anything here, so we don't know. In addition, we will expand our products with high design added value in order to realize flexible proposals that meet the characteristics of the area and various needs of landowners and tenants. As a result, our target for individual orders in April fiscal year is 215 billion yen. Okay. In the real estate rental business, we expect the number of properties unmanaged will increase due to completion of construction in the April 2025 period, leading to an increase in various fee income, and that real estate rental sales will exceed those of the April 2025 period. At the same time, as occupancy rates remain favorable throughout the year, profits are also expected to increase. Our group aims to complete an intermediary network aimed at supporting orders and improving occupancy rates, and we will proceed with opening, relocating, and consolidating homemade stores, direct stores, in areas of high market potential, such as in front of stations along major roads, in order to optimize store locations, while developing homemade franchise stores, homemade online membership in areas where we do not have direct stores. With regard to expenses, as you know, we will continue to recruit and hire in order to secure sales personnel, as well as making upfront investments aimed at increasing future sales, such as strengthening advertising and promotion activities to improve corporate image and promote sales. Still not as detailed as I would like, you know. And it sucks that they don't have like they don't have they don't have enough information that I'm looking for. Like, it's pretty, I mean, they have some information I'm looking for, but they don't have as comprehensive of information that I'm looking for. Little orders, breakdown by region. So 317, that'd be 14.8. Somewhere along there. Was it 14.8? They don't do segment profit here. Let me think about this. Doesn't have enough information. Either that or they hid it somewhere. That's annoying. That is annoying. Okay, so in order to figure out the value of this company, we need to actually look at the trend and the amount of leasable properties that they have accumulated over time. I'm very certain that they're going to continue to generate more like margins from the rental business, and then basically construction business flows into rental business. Rental business provides a stable income over time, which is why it trades at these low ass multiples. And the question is, how do they utilize that cash? In a sense, the cash actually protects the value of the company. Yeah. Trade at 8,000 one point. 8,000. That would have been a good price. 10,000 is a great price too. Let's take a look at enterprise value change over time. That's going to be amazing. Yeah, formerly negative enterprise value. Yeah. Alright, negative enterprise value, and it goes back up, and it goes back down, and then it's just like market cap. I think this one you kind of have to buy the low PE. I think that's the play here. What's been their lowest in market cap? Let's see. 63.71. So market cap is 3x, 80 something. Yeah, I would agree that anything around like 100 million or lower is definitely really cheap. PE 10 times, 9 times. Doesn't even provide calculator. Okay. 16, 11, 11, 12, 8 times, 7.5 times. Yeah, that's too cheap. Yeah. this is a great price. And then trying to think about the angle here. It could definitely be cheaper. Yeah, so the way to value this company is look at the progression of the amount of rental units that it adds into its sublease that it's able to rent out, and then you assume some equilibrium occupancy rate, and based off that you can determine what the pretty highly recurring profits are for the business, and then you assume some stable construction revenue trend, and also attain some level of profit margin that you think is in equilibrium. Yeah, and you forecast at least one. The construction business isn't worth that much, but it's the leasing one that I think is worth the most. And then you apply sum of parts valuation on the business. Yeah. The question is, what can they do with the 136 billion of cash on the balance sheet? That's just ridiculous. So, yeah, so cheap on enterprise value basis, but expensive on, wait, hold on, did I even, yes, this is 1766. Expensive on PE basis. What to do, is this A? I'm also, okay, let me take a look at how much cash they've held for how long, because if they've held big cash balances for a very long ass time, then they're just, oh, okay, yeah, they just done it for historically, just be like, fuck shareholders, we're gonna hold a bunch of frickin' cash, eh? Okay, so that's not gonna change that anytime soon. Probably some type of value trap. For these ones, you just buy low. You know, you buy a negative enterprise value and then you hope for the best. So I think this is something you put in your watch list. So this is definitely a B plus, minimum B plus, I think. But be aware that this could be a value trap, and that management's not gonna, not gonna do buyback or whatever. I mean, they shouldn't buy back because they're not really trading below 1x book. But yeah. Okay, so as a recap, thank you everybody for joining in today. We identified one more A company, which is 173A, and the reasoning behind that is it's increasingly higher margin business with operating leverage. They do software, and the revenues are expected to grow over time. They are able, and they're just starting out to penetrate their market of large companies, but they can also do medium-sized businesses and also small-sized businesses. And so yeah, that one, and it has expanding operating leverage. So, and that one trades a pretty cheap multiple. So I think, yeah. So if we want to do a review, I mean, this is what that company looks like. So, 11 times PE, low valuation multiples, room to grow revenues, pays a dividend 2.5%. So looks pretty good. Looks pretty good. Yeah. And it definitely can use its cash. It can definitely use its cash to create more products and do some R&D. So yeah, 173A, and then the runner-up to that, I think today in terms of opportunity has been 1766, and yeah, these other opportunities are I8. All right. So yeah, I will continue the stream at a later date, possibly tomorrow or the day after that. But I'm also working on my monthly stock pitch, so I really want to do more work on that as well. So we'll probably do a live stream, a Japanese company handbook live stream every day or two until we find 10. But yeah, it's looking, yeah, I think we need to get out of this construction zone, this this construction arc, let's call it construction arc, and then once we get out of the construction arc, I think we'll be we'll do a lot better. So yeah, thanks for everyone for tuning in. And keep in mind, everyone that is in this chat, let me just quickly, let me just quickly go through it so that I have a mental note. So everyone in this chat will be eligible because you guys commented. Will be eligible for. I'm gonna do like a randomizer, right? So there's, let's say, 1, 2, 3, 4, 5 unique games. So this, I'll double check later. Let's say there's 5 people. I'll randomize on Google Randomizer, and then pick one of you guys to get a free monthly if you guys aren't paid yet. And if you are paid, then I'll just add on an additional 1 month paid sub to your existing subscription. And then originally I wanted to do like make it based off of subscribers, but that's only possible if you make your account public, because I can't see who subscribes to me. Like, I'm not able to see who subscribes to me if they make their account private. That's the thing, right? So even though I want to reward someone, so what you could do alternatively is after you sub, you just say subbed, right? So yeah, so today I was able to see Hakeem, so that's good. Hakeem has made his account public, so that's why I was able to like see Hakeem. So, but I also don't want to be unfair to people who have private accounts but have subbed. So if you have a private account and have sub, please comment that you have subbed today, so that I have some type of log. And then out of the people who have subbed, I will pick one winner through a randomizer as well to receive a monthly. Yeah, and then viewers, like I literally cannot see, like there's been 105 views, right? I can't see how many unique viewers and who they are, because if they have if they're private. So the best way is to engage in chat, and I'll pick someone. So the revision from my previous policy is I will give one viewer one monthly sub for free based off of the chat records. And then also out of people who state subbed, which that comment sub, because it's a trust system. So if you say you subbed, I'm going to believe you. And then out of people that say it's commented subbed, and I will do another randomizer, and that person will also get a monthly free sub as well. So yeah, please continue to join in into my my live streams. And yeah, we are at, let's see, what is our sub? We have 344, so we just increased 1 sub. But yeah, so please, I really want to get over 1,000, in ideally 3 months. So if you have any colleagues or friends who enjoy investing, please forward my YouTube to them and put a gun to their head and get them to subscribe. Just kidding. But yeah, really appreciate you guys joining in, tuning in. I see a lot of you guys are repeating viewers, which I'm really appreciative of. And yeah, feel free to next time also bring me Japanese stocks that you think are interesting, that are undervalued, that would spark some joy in me. Happy to engage. So yeah, that'll be it for today. We did a 4-hour stream, so I appreciate you guys tuning in, and see you guys next time.